So I believe we are live. Just let me know whether my audio video is properly visible and audible to you. See guys, if my audio video is clear, then do let me know in the comment section that I am properly audible to you. See guys, if my audio video is clear. Okay, so audio seems correct and video also seems correct. Just give me a minute. Okay, so we are live. So, hello everybody, and welcome to this English CA Final Direct Taxes and International Taxation Power Batch. A very, very, very good morning to all of you present here. I hope you all are doing really, really well. Although it is my perspective that you might be doing really, really well, I will, I wish to know it from your end. Do let me know in the comment section how you all are doing. Till then, let us brief what we had studied yesterday, or day before yesterday, or till now. On the very first day, we started off with understanding the provisions, what we had to study actually in this power batch. After that, we started off with basics. We completed of the basics on that day only. On second lecture and on the third lecture, now, we started off with capital gain provisions and we also completed those provisions also. Even yesterday, or I should say on the last day, we started off with income from other sources and we completed that chapter also. Today, we are to embark a very important chapter from your CA final for your CA final DT, that is profit and gain from business profession. It is, I must say, the most important chapter because you are bound to see first question and that too compulsory question from this chapter only. Even if you wish to study, even wish you if you wish to leave, you I have no choices but to study this chapter at least right now. Studying this topic or leaving this topic is the decision that is to be made on the last date. But today you have to study it very sincerely, very religiously. You have to study this topic because this topic is not only big but is important and technical and logical also. You might have studied this topic somewhere else, but today you will get a different perspective of this chapter altogether. We have with us Albert, we have with us Arjun, we have Chandu, and many other people joining one by one. Sir, what is this profit and gain from business and profession? Sir, every topic, as I said, starts with a charging section. What the charging section is? So charging section is section number 28. Can you all make me remind what was the charging section in capital gain and what was the charging section in case of IFOs? Can you all make me remind? Can you all tell what was the charging section in case of capital gain and what was the charging section in income from other sources? Sir, capital gain was capital. What was capital gain? So capital gain and IFOs. I want to know from all of you. The more you will reply, the more you will be attentive, the more you will be able to understand things better because this is not a chapter that I just come and read out. I have to explain provisions for which I want to know what you already know. So for that matter, you have to respond. What was the charging section in case of capital gain and what was the charging section in case of IFOS? Yes, Arjun says it's section 45 in case of capital gain. And he says section number 56 in case of IFOS. Absolutely correct. Section 45, 1, Section 45, subsection 1 of capital gain speaks about what all income shall be taxable under that capital gain. Similarly, Section 56 1, Section 56 1 clearly states out which all income shall be taxable under IFOS. Similarly, for business income, section number 58 speaks out, which says the following income shall be taxable under the head PGBP and what all incomes are taxable. First of all, is sir, any income, any profit and gain arising from business and profession carried out by SSC during the previous year. If SSC does business even for one day, beautiful Chandu, beautiful. If SSC does business even for one day or even for entire year, it is considered as profit and gain from business profession that shall be taxable under the PGBP only. Second thing, do you remember in partnership firm pays interest and remuneration to the partner. Provision says any interest remuneration paid by the firm to the partner shall become the PGBP income of the partner. Partner receiving such interest or remuneration has to offer such income under PGBP head. No IFOS, no any other head, no salary head. It is always PGBP, always PGBP. So we got this point. Third point is that any insurance sum received on account of key man insurance policy. So you must have seen many of the corporate companies have their key managerial personals insured. For example, Reliance does the insurance of Mukesh Ambani. Adani Group does the insurance of Gautam Adani. So in case of any fatality of these key man person, company is going to receive certain sum which will make them continue for a very longer period. So any sum that is received on account of key man insurance policy is taxable under business head. Next point. So, for example, if I receive any grant, if I receive any kind of subsidy from either central government, either state government, or from any government that is assumed to be business income, simple things not to worry about it at all. Sir, I have not told you. My father is a super stockist of Hindustan Unilever. I mean, the way he does business is like nobody does. The way he does business is like nobody does the business. The company people are fan of him because any product that they want to launch, they just offer it to my father, and my father just sells it away. For that matter, many a times he received gifts from the company. Sometimes he receives car, sometimes he receives gold chain or any other assets he receives. Provision says such incentives that are received on account of business relation shall also be considered as business income. So we got this point. We got this point to the fullest. Third, sir, FMV of this talk on the conversion. Sir, what happens this? Sir, in capital gain, we studied a topic where capital asset was converted into stock in trade. So as on the date of the conversion, whatever the FMV were considered as full value of consideration for capital asset. Listen. Focus. Sir, when capital asset was converted into stock in trade, FMV of the conversion, FMV on the date of conversion was considered as full value of consideration and capital gain was computed. Similarly, when stock in trade is being sold, so FMV on the date of the conversion shall be considered PGBP, and that FMV shall be considered as cost of acquisition for the purpose of computing the depreciation and for the purpose of computing in case capital gain. So got this point? Yes, sir, we got this point. Sir, for example, you do any kind of export and you receive any kind of incentive in return, or sometimes you get duty drawback, or sometimes you have certain import entitlements, any money on account of sale of such import entitlements, these incomes shall also be considered as PGBP. And eighth point is that any kind of non-competition fees received. Let's just listen to this example. You know what? I was teaching DT and everybody seemed to like it. But there were some anti-DT forces. You understand? Anti-DT forces. Who doesn't want DT to expand? Some anti-DT forces paid me 20 lakh rupees for not teaching DT. Provision says any money received for not carrying on business, not carrying on any profession shall also become taxable under the head PGBP. What I am saying is any money received on account of not carrying out business shall also be taxable under the head PGBP. Oh my God. Not only this, if I am being stopped from sharing any kind of secret, if I receive any money on account of not sharing any secret, provision says that money is also considered as PGBP income. That money is also considered PGBP income. So, for example, that anti-DT force that somebody asked me to stop teaching DT. Just an example. Somebody asked me to stop teaching DT. As soon as I got this offer, as soon as I got this offer that I have to stop teaching DT, I just started away teaching, telling all the secrets how to teach CT. Now, if Chandu wants to teach TT, he can also start. Now, if Arjun wants to teach TT, he can also start. If Albert wants to start teaching TT, he can also start. As this is starting of the blowing of the secret, how to teach TT. Provision says if any money is received on account of not sharing any secret, that shall also be considered as profit and gain from business and profession. So there is a point income derived from trade association from members for specific services. We shall study this point later at when we are studying section 44A. Till then, we have to wait. Another provision says, sir, explanation. What it says, sir, if you are having a business of letting out of property, see, if you have house property, your business you can either let it out. That can be your house property work, but sometimes you have business of letting out property. Sometimes you have a business of letting out property. This application is relevant to those people who have house property and their business is of letting out of house property. So if you have a house property that is let out for commercial purposes, if you have commercial house property let out, then it is always PGBP income. But if you have let out any residential house property, then it is not PGBP, or I should say never PGBP. It is always house property. See, people used to offer such incomes under the PGBP head and they used to claim lots and lots of deductions. But Finance Act 2024 came with an amendment which said that any income derived from letting out of residential house property shall always be taxable under that house property act. Despite of the fact that it is your business to let out such properties, income from residential house property will always be house property income. So this was the explanation. Just tell me any doubt till now or not. Everything clear till now, till now or not. Everything clear to be told. Just let me know everything clear till now or not. Monisha, oh my God, Monisha, long time no see. Okay, okay, sir, absolutely clear. Now, continuing further with clear, sir, absolutely clear. Your messages do fill me with lots of positivity. You understand now? So you have to respond it every time. The speculative business. See, all in all, what speculative business is? Sir, speculative business is the business in which we do buying of goods, selling of goods without taking delivery of goods. Just remember, buying of goods, selling of goods without taking delivery of goods, buying of shares, selling of shares without taking the physical delivery, buying of commodities, selling of commodities without taking physical delivery of such commodities. It is called, sir, it is called speculative business. Sir, for example, intraday trading of shares, for example, uh, trading of commodities, sir, it is called speculative business. Sir, understand this thing. So there are four such services which are never considered as speculative. There are four such services which are never considered as speculative. What are those? If you do any kind of hedging contract on raw materials or shares, if you do any forward contract, if you do any kind of derivative trading on recognized stock exchange, or if you do any kind of derivative trading on commodities on recognized stock exchange, and you also pay commodity transaction tax on such derivative trading, then these four activities are not considered as speculative. Sir, why speculative business is treated as separately? Because losses from speculative business cannot be set off from other businesses. If you incur any kind of losses on account of these businesses, you cannot set off these losses with any regular business or any other head. That topic we will study in set off and carry forward chapter. Right now, I want you all to write one thing. Even though this line is written in set off and carry forward topic, but people tend to forget this. People tend to forget writing this point. So for that matter, I would request you all to write this one line that in case of amalgamation, losses from amalgamated company to amalgamated cannot be carry forward. See, even though this line is written in set off and carry forward topic, but I have seen on my past from my past experience that people tend to forget reading that chapter. So for that matter, I am giving you this line here itself so that whenever you are reading PGBP only, then only you are clear with this point. Just write it down. For example, if we have company like Zomato, if Zomato has certain kind of losses, and Zomato amalgamates with, oh sorry, if I have company called Blinkit, Blinkit has certain kind of losses. If Blinkit amalgamates with Zomato, then in that case, whatever the losses of Blinkit shall become losses of Zomato only. But sir, here is a catch. Any kind of speculative losses of Blinkit shall not be carried forward to Zomato. Speculative losses are never carried forward in case of speculative businesses. We just sorry, speculative business losses are never carried forward in case of amalgamation. This point must be written, although this point is written in cassette of to provisions, but most of the time people end up not reading that chapter because of lack of time. So for that matter, this should be written in your this chapter only. Section 29, how to compute PGBP. So section 29 says how to compute PGBP, which in itself says read section 30 to 43D. So we have to ignore this point. See, a good student can think of leaving this topic, leave of can leave this charging section. This is only for concept. This is not relevant for your exams. Section number 30 is the rents, rates, taxes, insurance paid for building. See, if I have any building, if I pay rent for that building, will that be allowed expenditure? Right answer is yes. If I pay, if I am the owner of the building and if I pay rent to myself, will that be allowed? Right answer is no. No. If I have building and if I pay rent for myself, right answer is it will not be allowed. Sir, but if building is taken on rent, then it is allowed. Rent paid is allowed. Second thing, if I pay any kind of rates or taxes or insurance, sir, it will be allowed to everybody. Sir, if I pay any kind of repairs, then only revenue repairs will be allowed, no capital repairs will be allowed. That is the bottom line. Similarly, for plant and machinery, if I pay rent of any plant and machinery, it will be allowed. But if I am the owner of the plant and machinery, if and I pay rent to myself, if I pay such rent to myself, will that be allowed? Right answer is it will not be allowed. Sir, if I pay any kind of insurance, it will be allowed. If I pay any kind of repairs, it will be allowed. If I pay any kind of capital repairs, it will not be allowed. Why, sir, capital repairs are not being allowed? Simple reason why capital repairs are added to cost of the asset. Therefore, no capital repairs is allowed in these provisions. Very important section, that is section 32, depreciation. Very important section. Sir, what this topic speaks about, just listen to it. Sir, first of all, you are not allowed depreciation, whatever is prescribed under Companies Act. Every time add it back. Whatever depreciation that is given in your question, always add it back because you are not allowed that depreciation. You are allowed depreciation in as per Income Tax Act. What Income Tax Act says, if you have any kind of asset that is used in business and profession, then you will be allowed depreciation on that asset. Second thing, if you are either owner of that assets or if you are the beneficial owner of that asset. Sir, what does that imply? For example, if I have this calculator, can I claim depreciation on this asset if I have bought this and if I have this asset, if I have been using this asset for my business, can I claim depreciation on this? Right answer is normally yes. Normally yes. Second thing, what if I bought this asset and gave this asset on rent to Mr. Chandu? Or I should say, if I bought this asset and gave this asset on lease to Mr. Chandu, then will I be able to claim depreciation? Right answer is yes, I will be able to claim depreciation. I will be allowed depreciation on this asset, and Chandu will get deduction for lease rentals, whatever he is paying. So, for that matter, we are allowed to claim depreciation. We are allowed to claim depreciation if we are the owner of the asset or if we are the beneficial owner. So beneficial owner imply we have paid the consideration even though we are not having the assets right now, but we have paid the consideration to acquire that asset, so we become beneficial owner. We are allowed to claim depreciation if we are owner or beneficial owner if such asset is being used for the business actively or passively. So depreciation in income tax is allowed from the date of asset put to use, from the date on which asset is put to use. Simple. But there are three assets on which depreciation is allowed only in case of ready to use. Sir, for example, we have fire extinguisher. Fire extinguisher shall be allowed only from ready to use now. Why a fire extinguisher be put to use? So it is depreciation on such fire extinguishers is allowed only from the date it is ready to use. Second thing, if we have any standby equipment, for example, I have this pencil. One pencil I have in my hand from which I am writing, but one pencil is always kept in the drawer so that in case this fails to work, I have a backup. Provision says if you have any kind of standby equipment, then in that case, depreciation on such assets will be allowed from the date on which it is ready to use. And third thing, if we have any kind of machine servers, then too we are allowed depreciation from ready to use date. So depreciation is a mandatory charge. If we intend to skip depreciation, can we skip it? Right answer is no. We have to decide. We have to reduce depreciation while computing the total income of the SSC. And also, sir, for example, if I have an asset, for example, if I have asset, I use it. I use only 50% of such asset. Provision says 50% of the depreciation will be allowed to me, and balance 50% shall be allowed to somebody else. Whoever is having the balance 50% share, then he will be allowed the remaining 50%. Depreciation only to the portion that I have shall be allowed. The other person will not be allowed to me. So depreciation is not allowed on goodwill and land. Simple provision it is. Yes, sir, simple provision. Sir, as per Income Tax Act, sir, we follow, sir, block of asset system on written down value method. Block of asset system on written down value method. So, simple point. For understanding these provision, we need to categorize all the asset that can ever exist in mankind into four classes. All the assets that you might see in the world shall be categorized into four classes. What are those four classes? First of all is, sir, buildings. Every asset that fall under building shall be categorized into three sub blocks. In sub blocks, and depreciation will be charged on those blocks. So, for example, if we have building can be categorized into three blocks. First of all is, sir, residential buildings. Residential buildings will be depreciable at the rate 5%. We can have any general building, we can have any commercial building, we can have any other buildings that shall be depreciable at the rate 10%. If we have any wooden structures, we have temporary houses, then those buildings shall be depreciated at the rate 40%. So we have three kind of blocks in case of buildings. First of all is residential building depreciable at 5% rate. We have general buildings, other buildings depreciable at the rate 10% rates, and we have other buildings or temporary buildings which are depreciable at the rate 40%. It is no issue whatsoever. So then we have second class altogether, which is called furniture. Second class, yeah, is furniture. So any kind of furniture that we have. For example, I have table with me, I have chair with me. Provision says if you have any kind of switches in your house from which you click on and off any tube light, then in that case, switches shall also be considered as furniture only. If there are wires in between the switches, behind the switches, that wires are also considered as furniture only. And all these furniture shall be considered as one block, and those are depreciable at the rate 10%. It's a simple point it is. We have plant and machinery. Sir, plant and machinery can be logically categorized into three categories. First of all is 40% rate, second is 20% rate, and third is 15% rate. Sir, we have six assets that fall under 40% category. We have six assets that fall under 40% category. Sir, what are those six assets? First of all is aeroplanes and aero engines. Aeroplanes and aero engines fall under 40% category. Second thing we have computer related softwares and computer related appliances. For example, computer shall be depreciable at 40%. Computer software shall be depreciable at 40%. Sir, if we have any kind of UPS, if we have any kind of printer, if we have any kind of scanner, all these will be depreciated at the rate 40%. All these will be depreciated at the rate 40%. Then we have any kind of books or annual publications are depreciable at the rate 40%. Sir, if we have any renewable devices, for example, if we have solar panel on our rooftop, provisions it is also depreciable at 40%. If we have any kind of, sir, pollution control devices, many factories have pollution control devices, all depreciable at 40%. If we have any kind of medical equipment, like in many factories have a machine for measuring diabetes, machine for measuring hypertension, sir, all these equipments which are medical related equipment shall be depreciable at the rate 40%. So there are all in all six assets that are being depreciable at the rate 40% that must be remembered are. So just have a very close look on this topic. I want all of you to remember this chart because sometimes the examiner wants to play with your memory and he wants you to remember these rates and people fail to remember these rates. So I want all of you to remember, at least with me. Sir, Sir, first of all, sir, aeroplanes and aero engines depreciable 40%. Sir, computer software and related related things. Then in that case, sir, 40% depreciation. Then we have books and annual publications, 40%. Then we have pollution control devices, renewable devices, and at last we have medical equipment, sir, all depreciable at 40%. See, whenever I take off my specs, it implies I cannot see anything. Therefore, I try to remember things by not seeing anything, by closing my eyes. So I request all of you also to just close your eyes and just try remembering all the provisions that I have just taught. Second block in case of plant and machinery will be of any boat, any vessel, any speedboat, any motor boat, any kind of vessel. So that shall be depreciable at the rate 20%. And at last, we have third block, which includes normal plant and machinery. We have other plant and machinery, any other plant and machinery. We have mobile phones, we have PPABXs, we have oil wells. Everything is depreciable at the rate 15%. In exam, if question comes out and it does not mention what type of depreciation rate will apply, you just simply have to reduce 15%. You just simply have to reduce, you just have to take 15% only. Sir, got this point, got this point. Sir, apart from this, we have intangible assets. Intangible assets depreciable at simply 25%. In this case, in these cases, sir, there are two special cases. What are those? Sir, if we have any kind of motor vehicle, if we have any kind of motor vehicle, provision says, and it is our regular business. It is not the business of motor vehicles. Sir, our businesses of garments, our businesses of shoes. We have any regular kind of business. And if we buy motor vehicle for our business, provision says it will be depreciable at the rate 15%, like a normal motor vehicle. But sir, if I had acquired and put to use such motor vehicle from 30th August 2019 before 31st March 2020, then in that case, instead of 15%, 30% depreciation will be given. If we have if we have a business of renting out or leasing out of motor vehicle, then normally we are allowed 30% depreciation. But if our plant and machinery is acquired and put to use from 30th August 2019 till 31st September 2020, then in that case 45% depreciation will apply. Did we get this point on? Sir, also for windmill, we have depreciation. If windmill is installed, when windmill and its equipment, if installed prior to 1st April 2014, then it will be 15%, and later on after that, it will be 40%. So this is all about depreciation rates. I want all of you to remember these rates by writing it. I just want 1 minute. I will be writing depreciation rates. I want all of you to write along with me so that we are done with this topic. First of all, we have just write it along with me. This helps a lot. This really helps a lot. Just write it along with me. See, if we have any kind of building can be of three types. If we have building, a residential building, then 5% depreciation. Other building, commercial building, so 10% depreciation. If we have temporary structure, then we have 40%. If we have furnitures, switches, wires, then 10% depreciation. If we have any kind of plant and machinery are of three types. First one is 40% depreciation. It includes six assets. First of all is, sir, aeroplanes and aero engines. Then we have computer software, computer related devices. Then we have books. We have renewable devices. Then we have pollution control devices. Then we have medical equipments. Then we have 20% block, which includes boat, speedboat, electric boat, vessel. Then we have other plant and machinery. Sir, it might include mobile phone, PPABX, motor vehicle, other machinery, oil wells. Oil wells are depreciable at rate 15%. Sir, my question to all of you, if I have an iPad and if I have a tablet, public iPad or tablet, sir, what will be the depreciation? Sir, will it be 15% or will it be 40%? My question to all of you, if I have a tablet, what will be the depreciation rate on the tablet? Meanwhile, you can like the answer. Sorry, meanwhile, you can like the video and you can also tell the answer. So, what will be the depreciation rate in case of tablet? Will it be 15% or will it be 20%? Sir, fourth class we have. I want you all to answer. I want all of you to answer. At last, fourth class we have is intangible assets, which is depreciable at the 25%. We have two special cases in case of motor vehicle. Arjun, Monisha say 15%. Arjun and Monisha say it is 15%. Okay. What other people say? Sir, motor vehicle, we have either 15% or 30%. If our business is of renting out, then it is 30% and 45%. So 45% and 30% in case where it is acquired between 30th 8 2019 to 31st March 2020. Chandu says 15% and right answer is yes, it is 15%. Tablets are considered as mobile phone only. Therefore, they are leviable for depreciation at that 15%. So we got this point. Are we clear with the depreciation rates? Yes, sir, we are absolutely clear. See, what happens is normally every kind of assessee has to use this block of asset system on written down value method. But sir, power generating businesses have an option either to opt for this method or they can either go for individual asset system on straight line method. Like we do in Companies Act now, we do every asset, we value every asset and we charge depreciation based on useful life. Based on residual scrap value, we decide depreciation. Power generating and distribution companies are allowed that method, but sir, normally every assessee is forced to follow this WTV method. Sir, how depreciation is being calculated? Provision says, provision says, sir, for every block you have to follow this format. For every block you have to follow this format. If you have plant and machinery, follow this block. If you have any kind of computer, follow this format. For every block of asset, you have to follow this format. Sir, how this format goes? First of all, take the opening written down value of the block. Opening written down value is of the block. Sir, add three kinds of additions during the year. If any asset has been acquired and put to use for 180 days or more, if any asset has been acquired and put to use for 180 days or more, you have to add it separately. If any asset that has been acquired and put to use for less than 180 days, then in that case, you have to add it separately. And third category we have to add is any asset which is acquired and not put to use. In total, we will get the block. Sir, we have to reduce the selling price of an asset. We have to reduce selling price of an asset. Sir, I want the pinky promise from all of you. Sir, pinky promise. You understand pinky promise? Sir, I want a pinky promise from all of you that always you will be reducing selling price from the block. Sir, if you give away asset for free, zero is to be reduced. If you give away asset, asset is to zero is to be reduced. If you are selling it at scraps or whatever scrap money that you are going to receive will be reduced. If any asset has been destroyed, sir, zero is to be reduced. If any asset is stolen, zero is to be reduced. If any asset is theft, if any asset has been robbed, zero is to be reduced. Provision says only and only selling prices to be reduced from the block. Only and only selling prices to be reduced from the block. Sir, we got this point. We got this point to the fullest. Sir, just promise me that you are not going to change your thoughts. Just promise me that you are not going to change your thoughts, sir. We accept. We accept. After reducing the selling price of the asset, we will arrive at a WDV on which depreciation will be charged. Once we reduce the selling price of the asset, sir, we have to charge depreciation. Sir, any asset which is not put to use, any asset which is not put to use during the year shall not be allowed depreciation. No depreciation on such assets will be allowed if asset is not put to use. If any asset is not put to use, no depreciation is allowed. If asset is acquired and put to use for less than 180 days, then whatever the rate of block is, we will charge half rate depreciation on that. For example, if it is 15% block, we will just charge 7.5%. So we got this point. Sir, and on balance WDV, sir, we will charge full rate depreciation. Whatever the rate of block is, we will charge that. What I am saying is, first of all, opening, then take additions minus sales price Then it will give us block available for depreciation. We have to charge depreciation based on the number of days put to use. Not put to use, zero depreciation. Put to use less than 180 days, half rate depreciation. If put to use for more than 180 days or 180 days, then in that case, full rate depreciation will apply. As soon as we reduce the depreciation, we will get the closing WTV. We will get the closing WTV. So we got this point. Yes, sir, we got this point. Sir, now you have to answer my questions. Now you have to answer my questions, sir. For example, if we have a block of building, opening WTV 5 lakh, building was 5 lakh. No additions, no additions, no additions. Sales. See what happened is I sold this building for 2 lakh rupees. But sir, stamp duty value of this property was 10 lakh rupees. Oh my god. Sir, what should I reduce? The selling price should I be reducing or should I be reducing this 10 lakh SDV? See, if you remember section 50C, whenever you sell any kind of land building, then 50C is to be taken on account. You remember 50C is to be taken? Sir, what do I reduce? 2 lakh or 10 lakh? What do I reduce? 2 lakh or 10 lakh? What do I reduce? Should I reduce? Should I be reducing 2 lakh? Should I be reducing 10 lakh? Arjun says 2 lakh. What other people say? Monisha says 2 lakh. Sir, everybody has honored my pinky promise. Thank you so much for honoring such pinky promise. Sir, examiner may try to confuse you just by giving you stamp duty value. And it is correct that for capital gain computation, we have to take stamp duty value as full value of consideration in such cases. But sir, for getting the WTV, we have to reduce the actual sales price. Whatever the actual sales price we receive, we have to reduce. So we got this point. We got this point to the fullest. Now, sir, another question. For example, if we have a plant and machinery acquired in previous year, 24-25. See, it is assumed that if we acquire and put to use for less than 180 days, then in that case, half rate depreciation will apply. Sir, we know this point, but we did not put to use in that year. Put to use, we did not put to use in that year. Okay, sir, we got this. Sir, we put to use such assets in previous year 25-26 for less than 180 days. We acquired such plant and machinery in previous year 24-25. We were supposed to put to use that plant and machinery for in that year only, but we did not put to use. So in that case, we were not allowed depreciation in that year. But later on, we put to use that plant and machinery in previous year 25-26, and that too for less than 180 days. Will I be allowed half rate depreciation or will I be allowed full rate depreciation? My question to all of you is, will I be allowed half rate depreciation on such machinery or will I be allowed full rate depreciation? Oh my god. Oh my GAWWWWWD god. So what is this GW? See, many of the Gen Z's people, so-called, right, God this way. They do not want to disturb the real God for this. This is just an example. GAWWWWD God. Chandu says full rate. Chandu says full rate. Monisha says full rate. Oh my God. How can you give the correct answer? This is not done. This is not done. You have paid for classes. You have paid for classes. How can you give correct answer? I want wrong answers from you all. If you will give wrong right answers, then how will I correct you? What will I correct? So let's ask some difficult questions. So you know these basics, I guess. Let's go back, sir. For example, if we have plant and machinery, opening value, opening block, 10 lakh. Additions, plant and machinery 15%. Additions, 20 lakh. One of the plant and machinery, which was acquired on 1st April 2023 for 5 lakh, has been given during slump sale. You remember slump sale? You remember slum sale? Sir, when a part of undertaking is being sold for entire consideration, no individual asset is being assigned a single value. Sir, for that matter, we are giving this away in slum sale. For example, any asset which is a part of the block is being given in slum sale. What to do in that case? So this plant and machinery was acquired on 1st April 2023 for 5 lakh rupees, and this is being given in slum sale. We had opening block of 10 lakh. We have additions 20 lakh rupees. Total value that we are receiving is 2 crore rupees. 2 crore rupees we are receiving. 2 crore we are receiving for the sale of the business. Sir, what is the amount to be reduced from this block? What is the amount that is to be reduced from the block? What is the amount that is to be reduced from the block? See, what happens is now I wanted to know what you already know. You know some things. You are already equipped with good basics. I can understand that. So it's my duty is to elevate your basics. Sir, what will be the amount that is to be reduced for the purpose of depreciation? Chandu says 30 lakh. Arjun says WDV. See, what happens is if we have a block of certain assets, we don't know how many assets, block of certain assets, and out of those certain assets, one or two assets or multiple assets are being given in slum sale. Then how to compute WDV of such assets? Provision says we have to assume that those were the only assets in the block. For example, we assume that this was the only asset in the block. Then what would have been the WDV? Then what would have been the WDV? If this 5 lakh were only the asset in the block, then WDV would have been minus 15%. Opening WDV would have been first on first for 2024 would have been 4.25 lakh. Right answer is yes, 4.25 lakh. WDV of this asset as on 1st April 2024 would have been to 4.25 lakh. Provision says assume this were the only asset in the block, and whatever the WDV would have been if these were the only asset, that WDV has to be reduced, and this will give us the closing WDV available for depreciation. Closing WDV for depreciation. Did you get this point or not, sir? If any asset is being given in slum sale, it is assumed that this were the only assets in the block. Arrive at WDV, and that WDV should be reduced while calculating the closing WDV for the purpose of depreciation. Therefore, right answer is WDV. Very good, Arjun. Very, very, very good, Arjun. Maybe Monisha Chandu, you might have given wrong answers because I was not clear with the question. That might be the case, but you will get many opportunities to correct yourself. You will get many opportunities to correct yourself. Sir, capital gain, capital loss in case of depreciable assets. In case of depreciable assets. First of all, sir, For example, we'll understand this with an example. You'll understand it beautifully. So, for example, if we have opening WDV with two assets and those opening WDV was 1 lakh. Sir, you are clear with the concept now? If you are clear, just let me know, sir. Clear. You just write down clear in the comment box. I'll understand that you got the point. If it is not, if these were not clear to you, just write down not clear. So we'll discuss about that again. Sir, if we had two assets in the opening WDV and two assets were worth 1 lakh, I should say WDV was 1 lakh. During the year, we acquired three assets. We acquired three assets whose WDV was 2 lakh rupees. Now, all in all, we have five assets which have WDV of 3 lakh. We have five assets whose WDV is 3 lakh. Sir, I sold all of the five assets for 4 lakh rupees. Oh wow, sir. Oh wow. 3 lakh worth assets are being sold at 4 lakh rupees. That means we have a gain now. That means we have a gain now. Right answer is yes, sir. 1 lakh is our gain. 1 lakh is our gain. So shouldn't this be gain? Shouldn't this be taxable? Right answer is yes, sir. It is taxable as short-term capital gain. Sir, why short-term? Why capital gain? I'll tell. But just assume that this is 1 lakh gain that is taxable. That should be taxable. My duty is I'll tell you why short-term, why capital gain. I'll tell you everything. But just understand this. Sir, this is the gain of 1 lakh that should be taxable. Second case. Sir, if I have two machineries whose opening WDV is 1 lakh rupees. If we have three, we have got three machineries whose value is 2 lakh rupees. All in all, we have five machineries, five assets worth rupees 3 lakh of WDV. All of these five assets I sold for 1 lakh. Oh my god. We have five machineries worth 3 lakh. All of those five machineries I am selling for 1 lakh. In Sindhis now, we says thukkatai. We says thukkatai. You should be ashamed of yourself if you are able to sell it at such a loss. Provision says if it is loss, then 2 lakh should be lost now. 2 lakh should be loss. If all the five machineries are being sold at a loss, then we should book a loss. It will be short-term capital loss, sir. We got this point. Similarly, sir, third case, if we have two assets worth rupees 1 lakh, we buy three assets worth rupees 2 lakh. All in all, we have five assets worth rupees 3 lakh rupees. Sir, of the five assets, we are able to sell only two at rupees 5 lakh. Just imagine, only two are being sold at 5 lakh. Only two are being sold at. That means we are having too much of profit. We are having too much of profit. Provision says this profit of 2 lakh has to be booked. Profit of this 2 lakh has to be booked and it will be short-term capital gain. Remaining assets become useless and we will not get depreciation on such assets. Provision says if we have any kind of two assets, we buy three assets. We sell, our WDV is 3 lakh rupees for five assets. Out of these five assets, we only sell two and reduce WDV 2 lakh. Then even though we are 1 lakh, we are left with 1 lakh WDV, we have three assets. Depreciation shall continue to be charged. Depreciation shall continue to be charged. No issue whatsoever. No issue whatsoever. That means if either of the block becomes zero or if the asset becomes zero, we have to book depreciation. If block becomes zero or assets become zero, then in that case we have to charge. We have to book capital gain or capital loss. So simple doubt comes out to be why capital gain and why short term. Why capital gain and why short term? There are simple reasons for that. Simply, sir, we need to understand, sir, what is a capital asset. Just remember the second class, first half an hour. Sir, capital asset is nothing but any asset is a capital asset. Any asset which is not movable, which is not personal, it is capital asset. Sir, we studied now there were four exceptions. Any kind of stock in trade is not capital asset. Any kind of movable personal asset is not capital asset. See, is it movable? Sir, all the assets are movable, but all these assets are for the purpose of business. So they will not be excluded from the definition of the capital asset. They will not be excluded. Therefore, they all become capital assets. Every machinery, every furniture, every land, every building is a capital asset because these are not personal. These are not personal. They will become capital asset. Always they will become capital asset. So any gain on capital asset will be capital gain only, capital loss only. Therefore, the word capital gain, capital loss comes out. Sir, but why short term? We got this point. Why capital gain? Why capital gain? We understood. So why short term? Why short term? So just think it that way. Just think it that way. Whenever you acquire plant and machinery, whenever you acquire plant and machinery, slowly and gradually over the period you claim depreciation. Slowly and gradually over the period you claim depreciation. And by claiming depreciation, you reduce your business income. Every year you reduce your business income. Such business income would have been taxable at the rate of slab at the rate of 30%, such business income would have been taxable at the rate 30%. If you are every year reducing your business income with 30% with depreciation and saving taxes by 30%, shouldn't this be the case when you are selling such assets that should also be taxable at slab, that should also be taxable at 30%? Right answer is yes. If we are saving our business income by 30% by claiming depreciation, our business income should be taxable when we are selling such assets. Right answer is yes. That is the only reason why short-term capital gain came into picture, because such short-term capital gain is taxable at slab only now. In last class only we studied that if we have any kind of short-term capital gain, if we have any kind of short-term capital gain which is not 111A, so it is taxable at the rate of slab. It is taxable at the rate at which your normal income is taxable. Therefore, sir, any kind of gain on depreciable asset is short-term capital gain only. Did you get this point or not? Are Baba, did you get this point or not? Yes, sir, it is absolutely clear. We absolutely got this point. So short term, because sir, we want to tax it at slab rate, therefore it is short term. Capital gain, why? Because it is capital asset, therefore it is considered as short term capital gain, short term capital losses. Are we clear with that fact? Are we clear with that fact? Just let me know, sir. Clear, 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 so that my heart is relaxed. My heart is relaxed. Whenever you do not reply, now it starts beating very fast. It starts beating very fast. Next topic is additional depreciation. See, if you read my book, depreciation topic has been very logically assigned, very logically assembled. First of all, we understand the basics, then we understand rates, then we understand how to compute that depreciation, then we understand capital gain, then we understand additional depreciation, then we understand cost of asset. Everything has been logically assigned. Sir, clear, absolutely clear. Okay, sir. Now additional depreciation. See, if you're into business of manufacturing, if you're into business of publication or production, it includes printing and stationery. If you have any kind of printing stationery business, that is considered as manufacturing only. Along with that, if you have any kind of business which is into production, distribution, transmission of power like Tata Power, Adani Power, if you are into business of generation of power, distribution or transmission of power, all these businesses are eligible for depreciation, additional depreciation. Provision says whatever the new plant and machinery you acquire during the year, whatever new plant and machinery acquired during the year, you will get an additional depreciation at the rate 20%. You will get an additional depreciation at the rate 20% on cost of asset, and that too only first year you get. Not every year you will get additional depreciation. You will get depreciation at the rate 20% on cost of asset, that to year in which it is acquired. Sir, we got this point. Provision also mandates that if your plant and machinery is acquired and put to use for 180 days or more, you will be allowed full 20% depreciation. If used for less than 180 days, then in that case, half rate depreciation will apply. If used in next year, then in that case, next year you will get the depreciation. Not this year, but next year you will get the depreciation. So no issue whatsoever. No issue whatsoever. Hmm. That means our business should be manufacturing, business should be plant production of power. We'll get depreciation on plant and machinery. That too, plant and machinery should be used in business. Okay, so we got this point. 20% depreciation rate is half rate if used for less than 180 days, or if not put to use, no additional depreciation this year. We'll get the depreciation next year. Okay, sir. Whatever plant and machinery we acquire, we must make sure that it is new plant and machinery. No additional depreciation will be awarded in case of second-hand plant and machinery. So no second-hand at all. No second-hand plant and machinery at all. Sir, whatever plant and machinery that you acquire shall be used for factory premises. Sir, factory premises. Sir, no office premises. No office premises at all. No residential accommodation at all. No residential accommodation at all. Only factory premises. No residential accommodation at all. Also, sir, whatever plant and machinery you acquire, you should not claim 100% of deduction on such plant and machinery in any other section. For example, if your business is any kind of scientific research, you already get deduction 100%. You will not be allowed depreciation. You will not be allowed additional depreciation on plant and machinery. No additional depreciation is being given on any kind of aeroplane, any kind of aero engine, any kind of transportation vehicle, but but it is given on forklift trucks that are used in factory. Sir, I have drawn a skull in this topic because this topic is really important. First of all, in most of the cases, you will not even realize that you were required to charge additional depreciation. In most of the cases, you will forget that we are required to charge additional depreciation. So this should be a thumb rule. Whenever you see the word manufacturing, you should remind yourself that it is leviable for additional depreciation. You have to charge additional depreciation. Second thing, sir, additional depreciation is only given in case of plant and machinery. That to new plant and machinery, that to such plant and machinery that is used in factory, not offices, not residential accommodation. Then too, sir, it is not allowed in case of any kind of office appliance. It is not allowed in case of ships. It is not allowed in case of transportation vehicle. It is not allowed in case of aircraft ships. Sir, it is only allowed in case of machinery. That to use for factory premises. That to use for 180 days or more for 20%, or for 180 less than 180 days in case of 10%. Sir, are we clear with the depreciation? Right answer is yes, sir. Absolutely clear. Absolutely clear. Sir, section 43(1). What this section 43(1) talks about, sir, it is the beautiful section. It is a really very beautiful section. And I'll ask certain questions from this topic. You will understand it beautifully. Sir, what it says. Sir, what asset to be added to block of asset to claim the depreciation? This section tells about that. See, we claim depreciation on 10 lakh. We claim depreciation on 20 lakh. We add 20 lakh to block of assets. So provision tells how do you arrive at cost of asset to claim depreciation. What all expenses shall be added to cost of asset to claim depreciation? This section lists down certain expenditures which are allowed to be added to cost of asset. Sir, for example, if we pay any purchase price, that is to be added to cost. Second thing, if we have any installation charges, transportation charges, trial and expenses, so that are always to be added. If we have any kind of taxes, duties on which ITC is not available, so that is to be added, sir. For example, if we paid customs and no rebate, no refund, no drawback is to be given on such machinery, then that shall be added on cost. If we buy any plant and machinery or any motor vehicle on which GST is not allowed, credit of GST is not allowed, we have to add that machinery, sir. But if we are allowed ITC of such plant and machinery, then such GST will not be added to cost of asset. If we receive any kind of grant, any kind of subsidy, that is to be reduced. If we receive any amount from sale of the trial run products, sir, for example, if I buy a machinery which produces soaps, soaps used for bathing, okay, soaps. If I do the trial run test and I produce certain lot of soaps, provision says any kind of sale of such trial run product shall also be reduced from the cost of the block, because ultimately it is the incidental income that should be reduced. Got it, sir? Also, a provision says if any payment is made to single person in a single day, otherwise an account pay demand of electronic clearing system exceeds 10,000 rupees, shall not form part of the cost. Shall not form part of the cost. What I said, just listen to this. If I make payment, if I make payment to single person in a single day, otherwise an account pay check, otherwise account pay demand of electronic clearing system, that should not be added to the cost of asset. That should not be added to cost of asset. I want to give an example. I don't know. I cannot stop myself. I want to give an example to you all. For example, we have with us Chandu. We have example with us with Mr. Chandu. Okay. Whoever gives the right answer, he just have to message his number on this chat. I will give 31 rupees phone pay cash to him right away. 31 rupees of phone pay cash right away if you give correct answer. Mr. Chandu bought a machinery and paid 10 lakh. Freight 1 lakh. Received government grant 2 lakh. Paid salary to non-resident Technician Michael, rupees 2 lakh, no TDS deducted, paid 30,000 to transporter in cash, paid for trial run in cash rupees 20,000. I want all of you just to mention the cost of asset. What will be the cost of asset? What will be the cost of asset? What will be the cost of asset? Waiting. Okay, we have answers with us. We have answers. Sir Arjun, see, this is a very good question. And in PGBP, you might see any adjustment in exam. We must be well prepared now. Monisha says 9 lakh. Anybody else who want to reply? See, there are other people also live sitting. Just why not? Why don't you answer? I'm waiting for your answers. Everybody should answer this question. Everybody should answer. Sir, okay. Option time limit to answer is over. First of all, sir, okay. K Bhargavi says 9.5 lakh. K Bhargavi, 9.5 lakh. Okay, okay. K Bhargavi, do give such more answers. Okay, this will increase your confidence only. Sir, first of all, whatever is to be added, I am just highlighting them. Cost, purchase price paid will be added. Yes, sir, it will be added. Will freight be added? Right answer is yes, sir. Always freight will be added. Will government grant be reduced? Right answer is yes, sir. Government grant will be reduced. Next point is, sir, whether purchase price, whether any salary paid on which TDS has not been deducted, should this be added or not? Should this be added or not? Right answer is, 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 it should be added. There is no such provision where if we do not deduct a TDS, we shall not add it to cost. Chandu says 11.5 lakh. There is no such provision in cost of asset. Like if we do not pay, if we do not deduct TDS, such thing will not be added to cost. There is no such provision. That provision is only applicable for PGBP. That provision is applicable for PGBP. That if we did not deduct a TDS, then such provision is not allowed. Then such expenditure is not allowed. But we are not calculating PGBP. Now we are calculating cost of asset. So for that matter, it is okay. Okay, sir, we got this point. Sir, paid 30,000 rupees in cash to transporter. Sir, normally if we pay any amount exceeding 10,000 rupees, that should be disallowed. So this should be disallowed. This should be disallowed. This should not be added. Any trial and expense paid in cash are not allowed. This should not be allowed. So right answer will turn out to be 11 plus. The right answer will be 11 lakh. Oh my God! Oh my God! All answers are wrong, sir. But our heart cannot accept. Why those 30,000, 50,000 are reduced? Why those 30,000, 50,000 are reduced? Simple reason being you are not studying section 43, 48.3. Beautiful. I was expecting this answer. I was expecting this answer, Chandu. See, what I was saying is this is the depth of CA final studies. Chandu, that 30,000, 35, 30,000, 35,000 explanation to the transporter is given in section 48.3. Section 48.3 says if you are paying any sum in any sum to any person exceeding 10,000 rupees via account pay demand draft, electronic transmission, that will only be allowed. If exceeding than that, if you are paying in cash, it shall be disallowed. That is what section 43, 48.3 says. 48.3 also says that if you are paying any sum to transporter, then this 10,000 limit shall be extended to 35,000. Yes, this is what 48.3 says. Yes, this is what 48.3 says. My question to Chandu is, are we studying section 48.3? Are we studying section 48? Right answer is no. That transporter provision is that 10,000 provision is only applicable wherever section 48.3 is referred. It is applicable to PGBP. It is applicable to PGBP whenever you are calculating PGBP. It is applicable to IFOs whenever you are calculating section 57. It is not applicable when you are calculating the cost of asset. It is not applicable. Here, what is applicable is any payment done exceeding 10,000 shall be disallowed. Any payment done shall be disallowed because this line has been explicitly given under this section 43.1. Section 43.1 does not refers us to 48.3. If he would have referred, if this section would have referred us to section 48.3, then we would have allowed this 30,000. But since it is not referring us to section 48.3, it is itself saying that any payment done exceeding 10,000 shall be disallowed. So for that matter, any payment done to transporter also shall be disallowed. Got this, Chandu? Okay, sir. Huh. For the first time, you must have felt like it is worth, but it is worth enrolling for this batch. Any doubt in this point? Any doubt in this point? Any doubt in this point? See, we do have a lot of depth in CA final, but most people fail to explore such depth. Everybody clear with this point? Any doubt in this point? Sir, cost of acquisition in special cases? No, sir, no doubt. Beautiful. See, sir, there are certain cases now in which actual cost of acquisition we cannot take, or actual cost is not available. These are special cases. What are those special cases? Sir, for example, if we receive any kind of subsidy on any asset, if we receive any kind of grant on subsidy, provision simply says if it relates to cost of asset, just reduce it from cost of asset. Clear, sir, clear. If you have any kind of subsidy that is being received on account of asset, just simply reduce it from cost of asset. Sir, if we have paid any kind of GST custom, if ITC is allowed, then reduce it from cost of asset. If ITC is not allowed, just add it to cost of asset. So simple provision. Sir, if asset is acquired out of borrowed fund, sir, borrowed fund, like if you have taken any asset on loan, provision simply states that whatever the interest that you are paying on such assets, up to the date asset is put to use. Remember, put to use date is important. Whatever interest has been paid till then, you have to add it to cost. Remaining interest will become expense, and that shall be allowed as deduction under section 36. Hold these 3 points, we will discuss later on. Hold. Sir, if I have a building, for example, if I am sitting in a building, for example, right now I'm sitting in a building, of course I must be sitting in a building only. Sir, if I have a building, I'm using it for my personal purposes. If I'm using such building for my personal purposes, and all of a sudden I thought, why not to make this building my commercial building? Why not to make this building as my commercial building? Provision says if you convert any such building which was earlier used for personal purpose, Now, for commercial purpose, you will be allowed depreciation now. If you have a building, earlier it was for personal purpose, you were not allowed depreciation. But as soon as it becomes your commercial building, it becomes part of the block, you will be allowed depreciation. Provision asks at what value you will get the depreciation. And answer is being given in this special case that whatever the original cost was, you have to take that, you have to reduce the notional depreciation till current year. Notional depreciation as if you were allowed depreciation from first day only. Just take the notional depreciation and arrive at the actual cost, and on such actual cost you will be allowed depreciation. So for example, if building was acquired on 1st April 2022 for personal purpose. Now on 1st April 2024, I started to use such building for my business purpose. Provision says if this was acquired for 10 lakh minus 10% depreciation minus 10% depreciation, whatever the value comes, that is I guess 8.1 lakh. This will become the cost of asset. Now further on depreciation on this 8.1 lakh will be charged. So for if any building is building becomes part of the block which was earlier used for private purposes, now it is used for commercial purpose, then you have to take the written down value of the building. Written down value of the building. In case that you are given with multiple depreciation rates, then you have to take the depreciation rate of the current financial year. Okay? The year in which it was acquired is not relevant. Current financial year depreciation rate is the most important. This was so with the case if a building is used for other purposes, now use came to business. So for example, we might have other assets now. If I have a laptop which was used for personal purpose, now came into business, what value will be added to cost? Provision says, sir, whatever the purchase price of that asset is. See, for building, we are reducing notional depreciation, but for any other assets, we never reduce notional depreciation. Whatever the cost of asset is directly added to block. For building, we are allowed notional depreciation, and after notional depreciation, whatever value we arrive at shall become part of the block. But for any other assets, no other things is to be taken. For any other asset, whatever the original cost is shall be added to the block of asset, shall be completely added to block of asset. Did you get this point or not? Sir, for example, this is Rahul and this is Arjun. I was thinking, I want to reduce my income. I want to reduce my income. I want to reduce my income. What to do? 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 What I did? Arjun had a machinery, 100 crore rupees, worth 100 crore. I bought such machinery. I bought such machinery. Intentionally, I brought such machinery for 120 crore. I intentionally paid 120 crore rupees, claimed depreciation, and on the same date leased it out to Arjun. Oh my god. Oh my god. In substance, I do not even have the machine. I just bought it and leased it out to same person. Sir, first of all, will I be allowed depreciation? If yes, then on what price? First of all, my question is, will I be allowed depreciation, sir? Because ultimately, in substance, I'm not even having a machinery. Ultimately, in substance, I have bought machinery and leased out to the same person, sir. I do not even have a, I do not have a asset in substance. Will I be allowed depreciation or not? If yes, then at what rate, at what WTV I will be allowed? Will it be 120 or will it be 100 crore? Waiting for your response. Monisha says 100. Chandu says 100. It is nice. See, the basic thing is ultimately ultimately Rahul is paying 100, 10, 20 crore out of his pocket now. So he should be allowed depreciation. He's paying 120 crore rupees. He should be allowed depreciation. Sir, but question is on what value he shall be allowed? Provision says, sir, if he is buying intentionally at a higher cost, then it shall not be allowed depreciation. Provision says whatever the WTV of the previous owner is shall be allowed as depreciation. WTV of the previous owner shall be allowed as depreciation. Sir, if assessee is acquiring an asset in order to claim higher depreciation, I am not leasing it out to Arjun again. I am just acquiring a property just to claim higher depreciation. Provision says whatever the fair market value of the property shall fair market value of the asset is, I will be allowed depreciation on that only. So simple provisions these are. Not very technical, not very difficult. Just simple like wow. Just think of this. Just think of this example. Just think of this example. For example, I have an asset. Rahul has an asset. WDV is 10 lakh. I sold this asset at the rate 10 lakh rupees to Arjun. And out of nowhere, I acquired 20 lakh rupees. Oh my God. Oh my God. I have an asset whose WDV is 10 lakh. And I'm selling it to Arjun at rupees 10 lakh. And I'm reacquiring it at 20 lakh rupees just to claim the depreciation. Provision is very clear in this regard. Whatever the WTV at the time of sale was, take that. Whatever the reacquisition cost is, take that. Whatever is lower, you will get depreciation on that only. So whatever price you pay is irrelevant. Oh my God. Oh my God. So we got this point. Sir, for example, if my father gifts out any flat to me just for me to carry out the business. My father had bought certain flats, certain properties, so that as soon as I grow old, he will gift such property to me and I can do business on that property. So what happens if I receive any asset out of gift, or if I receive any asset out of exempt transfer? And if such asset become part of my block, so sir, I will be allowed depreciation. So on what value I should be allowed depreciation? Provision says normally it is the cost of the previous owner. Normally, it is the cost of the previous owner. If I receive any asset on which was exempt transfer, on which I had not paid taxes, it is exempt transfer. Provision says on what value I will get the depreciation. Provision says normally it is cost to the previous owner. But if previous owner was allowed certain depreciation, then after reducing depreciation, whatever the value was to him, that shall be considered as cost of asset. Sir, got this point. Stock converted into capital asset and sold for business. Sir, for example, if I have a capital asset, if I have a building, my building on which I had 20 flats. All these flats were available for sale, but all of a sudden I realized that one flat I want for my business purposes. So I converted this flat for my business purpose, for my office related purposes. So as soon as I converted this stock in trade into capital asset, whatever the FMV on the date of conversion was shall be considered as cost of acquisition. This FMV on the conversion shall be considered as cost of acquisition for this capital asset, and on this FMV I will be allowed depreciation. If we had any asset in scientific business, it came for regular it came into use for regular businesses. Provision says no depreciation will be allowed. No depreciation will be allowed. Why, sir? Why? Because ultimately 100% reduction has been taken in scientific business now. So while you will be allowed depreciation, no depreciation will be allowed. Sir, if any asset is being partly used for business purpose and partly used for commercial purpose, but partly for business, partly for personal purpose, provision says you will be only allowed depreciation on the component which is for business only. If 50% of the asset is being used for business purpose, you will be allowed depreciation at the rate 50% only. You will be allowed depreciation at the rate 50% only. Sir, hold this point for some time. Hold this point for some time. Sir, my question to all of you is, for example, if we have with us Monisha. Monisha acquired asset on 1st Jan 2025 worth rupees $10,000. Do respond to this question. Huh? Do respond to this question. It is a very good question that I'm asking. Monisha has acquired an asset on 1st April 2000, 1st Jan 2025 worth rupees $10,000. Sir, this asset was took on credit. This asset was on credit. This asset was on credit. As soon as she acquired the assets, her at that time, rupee, sorry, $1 was worth rupees 80. So she just recognized this asset at rupees 8 lakh rupees in her books of accounts. At that time, rupees were $1 was 80 rupees, and she was required to pay 10,000. So she just recognized this asset at 7 lakh rupees, 8 lakh rupees. When the date of payment came, for example, date of payment came on 31st March 2025. Within 3 months, she was required to pay. On that day, when she took out her purse to pay $10,000, she was required to pay 85 rupees for $1. Rupee depreciated so much. Rupee depreciated so much that she was required to pay 85 rupees for $1. So for that matter, ultimately she paid out 8,50,000 rupees. Just think of it of a person. Think of a person who has recognized 8 lakh rupees worth asset in his books of accounts. Now he is required to pay 8,50,000 rupees. Sir, he is paying extra 50,000. Right answer is yes, sir. He is paying extra 50,000. Sir, what will happen to this 50,000 rupees? Will it be transferred to P&L or will it be added to cost of asset? Will it be transferred to P&L or will it be added to cost of asset? Monisha says added to cost. Arjun says added to cost, and right answer is yes, sir, added to cost. Chandu says transfer to P&L. Right answer is it is added to cost only. Whenever any gain or loss happens to be on account of foreign exchange fluctuations, and such gain or loss relates to a asset, provision says that is always adjusted from block of asset. If it is gain reduced from block, if it is profit, if it is gain reduced from block, if it is loss added to block. Simple provision is that simple provision as it can be. Sir, I hope you got the point. Now, I just want to elevate you to an advanced level. Just think of this. For example, Monisha bought this asset. Monisha bought this asset worth rupees 10,000 US dollar. And at that time, sir, $1 was equal to 80 rupees. Monisha was very confident that dollar is going to rise. Monisha was very confident that dollar was going to rise. What Monisha did is Monisha on the spot date did a forward contract to buy 10,000 US dollar at the rate 80 rupees. Monisha on that spot only did a forward contract to buy 10,000 US dollar at rupees 80. That means after 3 years, Monisha will buy 10,000 US dollar at rupees 80. Yes, sir. We got this point. We got this point. On her initial recognition, she recognized the asset at rupees 870. She recognized the asset on of our rupees 8 lakh. So we got this. On the date of payment, on the date of payment, on the date of payment, sir, she bought 10,000 USD at the rate 80. But let me tell you, Sir, actual dollar fell to rupees 75. Again, she has a loss. Again, she has a loss. Hmm. 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 Sir, 5 rupee, five rupee for 10,000. She suffered loss. She has already recognized 8 lakh rupees as her cost of asset. Now she is having 4 lakh rupees loss in her forward contract because ultimately she could have easily bought dollar at rupees 75. She could have easily bought $10,000 at 75, but now she is forced to buy it at 80 because she has already made a contract. For that matter, she incurs a loss of rupees 50,000. Sir, my question to is, will it be added to block? Will it be transferred to P&L? Or eat 5 star, do nothing? Eat 5 star, do nothing. What are the three? Oh, these are the three options possible. What will you do? What will you do? Arjun says transfer to P&L. Arjun says. Monisha says block. What other people say? Many other people are like, why don't you answer? This will open up your brain. Definitely, this will open up your brain. Sir, first of all, we must be very clear that any gain on account of foreign exchange fluctuations relevant to an asset will never be transferred to P&L, sir. It is always either block. It has always to be adjusted from block. But sir, just imagine, she already has recognized the asset at 8 lakh rupees now. She already had recognized the asset at 8 lakh rupees now. She was supposed to recognize it 750, add 50,000 loss, and she was required to recognize it at 8 lakh rupees. Yes, this would have been the right treatment. This would have been the right treatment. 750 would have been actual cost, 50,000 would have been actual gain, actual loss. Then in that case, 8 lakh would have been the value. So in that case, she has already recognized now. She is paying 750. She is paying 7 lakh 50,000 rupees. 50,000 she is paying just to honor the contract. Ultimately, she is paying 8 lakh rupees. So already she has recognized 8 lakh rupees now. So for that matter, in this case, no treatment will take place. If she wouldn't have added this value to her block, then this would have been added. But right now, it is already adjusted from the block, so we have to do nothing in this case. Is this point clear now? Is this point clear? See, ultimately, whatever money she is paying 750. She is paying 7,50,000 rupees. She is also incurring loss of 50,000 rupees on account of contract. Ultimately, she is paying 8 lakh only. Ultimately, she is paying 8 lakh out of her pockets. Whatever she is paying out of the pockets, that should be added to the cost. Some of the component might be foreign exchange loss. Some of the component might be actual money, but ultimately she's paying 8 lakh only now. And she's paying 8 lakh for that matter. She has already recorded 8 lakh. So we have to do 8 5 star and do nothing. 8 5 star and do nothing. Is it clear, Arjun? Arjun, is it clear? Absolutely clear, sir. Bilkul, absolutely clear. Sir, we got this point. In case of amalgamation, demerger, conversion, succession, how things go. In case of amalgamation, succession, demerger, conversion, how things go, sir? See, things go very simply. Things go very simply, sir. What it says, sir, you have to take the asset. You have to take the asset. as if there were no amalgamation, as if there were no amalgamation, there was no demerger, there was no succession, there was no conversion, there was nothing, as if no such transfer, no such conversion has taken. Assume it. Calculate depreciation as if every asset was a part of old entity only. Calculate depreciation for the entire year for every asset as if you were calculating. There were no depreciation, no conversion took place, no amalgamation took place. Calculate depreciation in that way. Provision says now split depreciation on the basis of number of days. Number of days such asset has been in prior and in old entity, and number of days such asset has been in the new entity. You have to split it as per number of days, and that is how you will get the closing WDV of our asset. For example, let us understand this with an example. For example, if we have example Balaji. Balaji Limited is a company which had opening block worth rupees 5 lakh, depreciable at the rate 15%. On 1st Jan 2025, Balaji Limited amalgamated with Tirupati Limited and became Tirupati Balaji Limited. See, no offense to anybody. No offense to anybody. This is just an example. Assume that there has no amalgamation taken place. No amalgamation has taken place. What would have been depreciation if no amalgamation would have taken place? Sir, 75,000 would have been entire depreciation. Provision says split it on the basis of number of days. How many number of days this asset stayed in new entity? Sir, it has stayed for 31 days in Jan, 28 days in Feb, and 31 days in March. That means 90 days it had stayed there. And 275 days it had stayed in old entity. So out of 365, 275 days it stayed in old entity multiplied by 75,000. This will be the depreciation for new entity, old entity. 90 by 365 into 75,000 will be the depreciation for new entity. 56,506 will be the depreciation for old entity. 18,493 will be depreciation for new entity. Sir, if any asset would have been acquired during the year, then this would have been split in those number of days for which it has been used in old entity and it has been used in new entity. It is clear, you got the point. Can any intelligent brain tell me how do I compute the closing WDV for Balaji Limited? Can anybody help me out by calculating the closing WDV for Balaji Limited? So it is easy now. 5 lakh has been the opening WDV. Sir, 56,506 56,506 is the depreciation for Balaji Limited. Remaining depreciation will go to Tirupati Balaji Limited. The right answer it is Balaji only. Balaji Limited only. So after reducing depreciation, 56,506, 443, 494 is the figure. Can I simply say this is the closing WDV for Balaji? Can I say this? If you all agree with me, just tell. Can I say this is the closing WDV for Balaji? Can you all agree with me? Can you all agree with me that this is the closing WDV for Balaji? Right answer, yes sir, this is the closing WDV. Can I say this is the opening WDV for Tirupati Balaji only? If this is the closing for Balaji, then this will be opening for Tirupati Balaji. Yes. Can I simply say ki on this opening WDV only, from now on, Tirupati Balaji is going to claim depreciation? Right answer is yes, sir. Whatever the opening is for Tirupati Balaji is going to claim depreciation on that opening WDV only. Yes, sir. That is only written here. If any asset has been transferred in amalgamation to amalgamating company, whatever the WDV, whatever the closing WDV is to the amalgamating company will become opening WDV for amalgamated company. Whenever asset is being transferred by 100% subsidiary to 100% 100% parent company to subsidiary, in that case, what happens? So whatever the closing WDV is, whatever the closing WDV is for the old company, parent company will become opening WDV for subsidiary. Whenever a asset is being transferred, in case of demerger, whatever the closing WDV is for the demerged company will become opening WDV for resulting company. For that matter, depreciation has to be considered for entire year, and that has to be split on number of days. As we split as per number of days, reduce as depreciation from opening WDV of old company. This will give us the closing WDV of new old company, which will act as opening WDV of the new company. Absolutely clear, sir. Absolutely clear. Depreciation in case of power generating companies, sir, very simple method, very simple process. See, power generating companies have an option, as we have discussed in starting, that power generating companies have an option. They can either go for WDV method, as we have discussed earlier. They can either opt for WDV method. They can make block of assets claim depreciation as per block. They have an option of doing that. Either they can do that, either they have an option that they can go for individual asset system, account for individual assets and claim depreciation on straight line method. They can also opt for straight line method. Simply what to do, sir, assume the salvage value of every asset. Take salvage value of every asset, reduce such salvage value, divide by number of years of the number of years of useful life, claim depreciation per annum. They have an option of doing this. They have an option of doing this. So they can, if they wish, they can claim for individual asset system on straight line method. Sir, point to be noted, if a power generating company aims, if a power generating company opts for SLM method, then in that case, sir, no additional depreciation will be allowed to such power generating company. No additional depreciation will be allowed to such power generating company. Sir, only difference comes out to be is the sale of asset. If any asset which is a part of block, which is a part of which has been accounted individually in this power generating business, sale of capital gain will occur differently. At the time of sale, profit are differently accounted. Otherwise, everything remains same. Only the sale of asset is being different, is being accounted differently. See, in block, just I'm telling you a line. If you are able to understand well, if you are not able to understand, you can skip this. In block of asset, whatever the value of asset is being sold is reduced from block. When block finishes, then capital gain starts. If block is finished and if you are selling it over and above the block, capital gain starts. Similar provisions are being applied here. Just listen to this. For example, if I have a plant and machinery, see, individual asset is being accounted here. Individual asset is being accounted here. So, for example, if I have a plant and machinery acquired at rupees 100,000, sorry, opening is 1000. For 1 year, I claimed a depreciation at rupees 900 rupees. Closing WDV is 900. Closing WDV is 900. Now, suppose out of nowhere, I intend to sell this machinery at rupees 700. Isn't it a kind of 200 rupees loss that I'm incurring? Isn't it I'm incurring a loss? Right answer is yes, sir, I'm incurring a loss. If I'm incurring a loss, provision says that should be transferred to PGBP. PGBP. It should be transferred to PGBP. Why, sir? Why not capital gain? Because ultimately, sir, this was the depreciation that I was claiming now. Whatever thing is being sold below cost is your loss only. Is your loss only. So it should be transferred to PGBP. But whatever the profit that you're gaining over and above the cost, that should be transferred to capital gain only. So whatever loss I have incurred 200 rupees, that is PGBP. What if, sir, I sold such asset over and above this WDV, but below the cost? Cost was 1000, WDV is 950, cost is 1000, WDV is 950. I am selling it somewhere in between. Provision says we have a 50 rupees gain. That should be transferred to PGBP. 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 Sir, we got this point. Sir, but if such asset is being sold at a very high price, that is over and above the cost, then in that case, for this 1200, we have to account for two different things. Whatever the actual sales price minus cost is, that is rupees 200, that will go to short-term capital gain. But whatever the price up to cost is, that shall become PGBP. That is how things go. Whatever I have told you is clearly written in this table. Clearly written in this table. Sir, if asset is being accounted individually, then you have to calculate capital gain also individually. How capital gain is computed? Sir, if an asset is recognized at 1000, WTV is 900, and you sell it way below the WTV, then whatever the losses is your PGBP loss. If your cost is 1000, if your WTV is 900, and you sell it between, if you sell it below the cost but over and above the WTV, then whatever the gain that you incur, that whatever gain you have, you experienced, in that case, such gain will be your PGBP income. At last, if you sell it way above the cost, then whatever the profit that you arrived over and above the cost, that shall be your capital gain, and whatever the profit that has been arrived till the cost shall be transferred to PGBP. This is the capital gain in case of power generating entities. So I hope you got the point. I hope you got the point. So now last point is unabsorbed depreciation. So many a times what happens is our profit before depreciation is 10 lakh and our depreciation for current year is 22 lakh. Now we do not have even sufficient profit just to absorb our depreciation. We do not have profit. We do not have sufficient profit just to absorb our depreciation. So what happens is whatever the unabsorbed depreciation is, we can carry forward. Whatever the unabsorbed depreciation is, we can carry forward it. How long we can carry forward? Provision says for infinite period you can carry forward. So you can carry forward, you can set off this carry depreciation in from any other business later on. Even not just from business, you can set off this carry forward losses, carry unabsorbed depreciation from any other head also. If you have income from house property, you can set off. If you have income from capital gain, you can set off. If you have income from AFOs, you can set off. Can you set off against salary? Right answer is no. You cannot set off unabsorbed depreciation from salary. Whenever you have unabsorbed depreciation, you have current year depreciation, you have current year losses, you have prior losses. So what the sequence should be followed? Always the reduce current year depreciation. After that, reduce unabsorbed brought forward losses, and at last reduce unabsorbed depreciation. That is logically way. Sometimes what happens is if I have a business of garments, I happen to have unabsorbed losses and unabsorbed depreciation in case of garment business. Later on, I discontinue this garment business and continue with the textile business. In case of shoes business, shoe making business, provision says I can carry forward this unabsorbed depreciation and set off it with any other business also. Most of the times, if we have unabsorbed depreciation, we can set off such unabsorbed depreciation from any other businesses also. So no extra minute for stretching this point because it is not that relevant. Section 33 AB, ABA. Any doubt in depreciation? It took us more than hour to complete the depreciation portion. It took us more than hour, but it was relevant even. It was even relevant. Any doubt in depreciation? Just let me know. Absolutely clear, sir. Section 33 AB ABA talks about two separate businesses. First of all, Section 33 AB. Sir, if you are any assessee who is engaged in manufacturing of tea, coffee, rubber in India, tea, coffee, rubber in India. See, we already know that if you are into tea, coffee, rubber business, then some portion of business is already exempt and some portion is taxable. If you are into tea business, already sir 60% is exempt, 40% is taxable. If you are into coffee, if you are just growing into coffee or curing coffee, then in that case 75% is exempt, 25% is taxable. If you are growing, curing, roasting and grounding, in that case 60% is exempt and 40% is taxable. And if you are into rubber business, then in that case 65% is exempt and 35% is taxable. Sir, whatever the higher percentage is exempt. So apart from these exemptions, sir, you get a special deduction if you are into tea, coffee, rubber business in India. What it says, provision says just deposit certain amount into NABARD. It is National Agricultural Bank. Just deposit certain amount to NABARD. Sir, you have to deposit the amount up to the date of ROI or within 6 months from the end of the previous year, whichever is earlier. It has to be either 30th September or date of ROI, whichever is earlier. Sir, you will get a deduction. How much deduction you will be getting? Sir, whatever the amount that you deposit, say 40 crore, or sir, 40% of PGBP, say 30 crore. Sir, whatever is the lower, you will get the deduction. Amount deposited and 40% of PGBP. Just remember, whatever the amount that you are depositing, that should be utilized for the purpose prescribed by Tea Coffee Rubber Board of India. As and what Tea Coffee Rubber Board of India says, you have to utilize such money for that purpose. Otherwise, what will happen? We will study later. A similar section to the section 33 ABA, it says if you are into the business of petroleum and natural gas extraction, prospective extraction of natural gas and petroleum in India, then whatever you amount to deposit to site restoration account up to the end of previous year or 20% of the PGBP, whichever is lower, you will get deduction. You have to use this money as prescribed by Petroleum and Natural Gas Ministry of India. Two different businesses, two different deductions, two different periods, two different ways of deduction. But bottom line is, in both the businesses, you get special deduction. 33 AB talks about tea, coffee, rubber. 33 AB talks about prospective extraction and prospective extraction of petroleum and natural gas. In this case, you have to deposit a certain sum to NABARD. In this case, you have to deposit certain sum to SBI's site restoration account. In this, you have to deposit it up to 6 months from the end of the previous year or prior to ROI, whichever is earlier. In this case, you have to deposit it up to the end of previous year. In this case, you get 40% reduction. In this case, you get 20% reduction. In this case, you have to use it as per Tea Coffee Rubber Board of India. In this case, you have to use it as per Petroleum and Natural Gas Ministry of India. Certain common points are what this point says. So, for example, if you have already deposited certain sum in NABARD, if you have deposited certain sum in site restoration account, sir, you can use it as per the prescribed methods. You can use it as per the prescribed method, as per Tea Coffee Rubber Board of India says, or as per Petroleum Natural Gas Ministry says. You can use it as prescribed manner. Sir, provision says if you withdraw money at any point of time, you have to utilize it, and you have to utilize it prior to ending of previous year. You have to utilize such money. Sir, for example, if I withdraw on 1st September 2024, I have to utilize it before 31st March 2025. If I have withdrew such money on 1st March 2025, I have to utilize it up to 31st March 2025. If I withdraw on 31st March 2025, I have to utilize on the same day. That means you have to utilize such money in that previous year. Sir, what will happen if I don't utilize? Provision says it shall become taxable. If you withdrew money from NABARD or a site restoration account, you have to utilize it that year only, in that year only. Sir, you cannot misutilize such property. You cannot misutilize such property. Sir, what is meant by misutilization? Sir, if you are buying any plant and machinery for office, it is misutilization only. If you are using any plant and machinery for residential accommodation, it is misutilization. If you are using any office appliances, it is misutilization. But just remember, if you are given with computer, if you are said that computer is being bought, you can reasonably assume that computer is for factory purposes only. If you are buying any plant and machinery on which 100% reduction is taken, it is misutilization only. You cannot misutilize that money. That means you cannot buy any office appliances. You cannot buy any asset which is used in office. You cannot buy any equipment which is used for residential accommodation. If you cannot buy any machinery on which 100% deduction is taken, you cannot use that. Provision says if any such amount is being utilized for revenue purpose, then deduction on revenue expenditure shall not be allowed. Just think of this point. What I'm saying is, for example, I have I have an income. For example, sales of rupees 100 crore. Normally, income taxes, whenever you are spending certain sum, you are expending you are doing expenditure. Whatever expenditure you are doing is allowed. If it is allowed deduction, you have to pay taxes on the difference. You have to pay taxes on the profit only. But in this case, what we are doing? In this case, what we are doing? Whatever the profit is, we are allowing 40% flat deduction. We are not asking you to do any expenditure. We are not asking you to do any expenditure right now, and we are just giving it away flat deduction. We are just giving a flat deduction without asking you to do any expenditure. Yes, right answer is yes. Sir, what if out of 60 crore rupees of profit, 40% is allowed? 40% implies 24 crore is deductible. 40%, that is 24 crore, I have claimed deduction. That means this is the amount on which I have not paid taxes. Yes, sir, this is the amount that I have on which not paid taxes. Later on, if I do any revenue expenditure and claim deduction again, do you really think? Do you really think that government will allow such revenue expenditure? Right answer is no. Already I have saved the taxes on such profits. Already I have saved the taxes on such profit. Now if I'm doing any expenditure later on and again I want to charge it to P&L, will government allow? Right answer is no. Amount utilized for revenue purpose and then deduction on such expenditure will not be allowed as deduction in PGB. If you have already claimed a deduction on such sum, if you have already taken such money as exempt, now if you want to do any expenditure from that money, will that be allowed expenditure? Right answer is no, it will not be allowed. It will simply not be allowed. So we get this point. We really get this point. So sale of asset. Whenever you acquire any asset under section 33 AB ABA, you have to hold it asset for 8 years from end of previous year in which it is acquired. The previous year in which it is acquired, from end of that previous year, you have to hold it for at least 8 years. The previous year in which it is acquired, you have to hold such asset for at least 8 years from the end of such previous year. If such asset is being sold prior to that, then whatever the deduction claimed earlier is, that shall be taxable under that PGBP. I request you all, see whatever book you are following. I'm not saying that you might be following my book. I'm saying whatever book you are following, just highlight this point. Deduction claimed earlier shall be taxable under that PGBP. Whatever deduction that you have taken earlier shall be taxable under that PGBP. Also, it says if you are acquiring any of the tangible asset, if you are buying any depreciable assets from the money deposited in NABARD, whatever the money you are depositing at NABARD, if you are withdrawing certain sum, if you are buying any depreciable asset, provision says depreciation on such assets will not be allowed. Ultimately, we are already given deduction of such sum. Now, again, you want to charge it to P&L and claim deduction. Provision says we will not allow that. We'll simply not allow that. Whatever sum that you are that has been kept aside, already claimed deduction on that. We will not give any separate deduction for such. If you are doing revenue expenditure, we will not allow such revenue expenditure. If you are doing any capex and you are claiming depreciation on that, we will not allow depreciation on that also. So this is how the format is. First of all, always take net profit, then take deduction, then take misutilized amount, then take asset sold during there, then take amount withdrawn and not utilized before division, and then do division, and then losses to be taken. Okay, sir, we got this point. All in all, I told you three things become taxable. First of all, if you withdraw money from the bank, NABARD, or site restoration account and did not utilize it previous year, it shall become taxable. If you utilize it for wrongful purpose, that means office premises, like residential premises, or any other office appliances, or any other, if it is used for land and machinery which has already been taken as 100% deduction, it becomes misutilized, it shall become taxable. And at last, if you sell any asset within 8 years from the end of the year in which such asset is acquired, you will not get deduction. You will not get deduction. It will become taxable ultimately. Three things become taxable as it is written in the format. You can click the photo of this format or take the screenshot. This will help you out in solving the questions. Sir, if you close any on account, if you close any business, then whatever amount that has been taken out from the NABARD shall become taxable. If there is any liquidation or any death of SSC or partition of HUF, not taxable at all. Whenever you claim deduction under section 33 AB, ABA, you are required to maintain books of accounts, furnish a report by the chartered accountant in Form 3 AC 3 AD up to the due date of audit. Up to the due date of audit, you are required to get your books of accounts audited by chartered accountant and also get a form signed by the CA, Form 3 AC and 3 AD, that whatever deduction that you are claiming is correct. Section 35, scientific research. Any doubt till now? I want this thing to be very clear. Any doubt till now? No, sir. Absolutely clear. Section 35, sir, scientific research. What it talks about. See, if you are either engaged in scientific research business, for example, a company like Cipla who regularly does scientific research to make new medicines. If you are into scientific research business, or sir, you are donating somebody who is into scientific research, both the expenditures are covered in this topic. First of all, if you are yourself doing any scientific research and you have already commenced your business, like Cipla has already commenced business, provision says whatever the revenue expenditure you do during the business, you will be allowed, 100% allowed, no issue whatsoever. But sir, if you are doing any capex, capital expenditure, it shall also be allowed 100%. Remember, but you cannot claim deduction on land. For land, you are not allowed any deduction, but for any other capex you are doing, like plant and machinery, you are doing furniture, you are doing building, anything that you are acquiring, you will be allowed 100% deduction on that. Sir, but what if we have not commenced our business? We have not commenced our business. Will we be allowed depreciation? Will we be allowed any expenditure? Will we be allowed anything? Provision says no issue. Provision says no issue. Just remember the date on which, just remember the date on which you commence your operations. Just remember the date on which you commence the operation. You will be allowed deduction prior to 3 years also. If you have done any expenditure prior to 3 years from the date of commencement, you will be allowed deduction. Sir, what deduction you will be allowed? Provision says if you are doing any revenue expenditure on material or salary prior to date of commencement of business, you will be allowed in the year in which business commences. 100% deduction is allowed on material and salary. No other deduction before commencement of business will be allowed. No other deduction. No other deduction shall be allowed prior to date of business, prior to date of commencement of business. If you have done any capital expenditure, Arjun, I'll get back to you. If you are if you have done any capital expenditure prior to the commencement of the business, you will still be allowed to that expenditure. You will still be allowed deduction of that expenditure if it is done within 3 years prior to date of commencement of business. If such expenditure is done within 3 years prior to date of the commencement of the business, you will be allowed deduction on such capital expenditure also. So 100% will be allowed, but no deduction on land will be allowed. So if you have commenced business, then whatever revenue you have done doing allowed. Whatever capex you are doing, it will be allowed, but not on land. If you have commenced your business prior 3 years, expenditure will also be allowed. In terms of revenue, you will be allowed salary and material expense. In terms of capex, you will be allowed every capex that you have done in prior 3 years. But for land, you will not be allowed. This is the case when we are doing in-house scientific research. But sir, what if we are donating it to somebody? Provision says any company who is engaged in scientific research, if you are making any donation to it, 100% deduction. If you're donating it to any IIT, IIS, Indian Institute of Technology, Indian Institute of Science, or National Laboratory, sir, if it is involved in scientific research, you will be allowed 100% deduction. Sir, if you are doing any donation to approved curie, which implies approved college, approved university, approved research institution, approved institutes, you will be allowed 100% deduction on their scientific research and socio-statistical research. You will be allowed deduction. So this part talks about deduction in case of scientific research doing ourselves doing scientific research. Second part talks about people who are engaged in scientific research. We are donating to them. Remember this, sir, this provision is normally applicable. This provision is normally applicable to person opting in regular regime. But sir, for example, if somebody is into 115 BAC, BAD, BAA, BAB, and BAE, what to do? See, normally I teach this topic in that portion only, but just giving you a brief. All these expenditures are allowed in regular regime, but person opting for BAC, BAD, what all expenditures he will be allowed? Sir, he will still be allowed with revenue expenditure done during the research of the business. He will still be allowed revenue expenditure done 3 years prior to the commencement of the business. Sir, he will still be allowed for every capital expenditure that he is doing during the research except for land, if even if he opts for 115 BAC. He will be allowed for every capital expenditure that he has done 3 years prior to the commencement of the business except for land. But he will not be allowed any kind of contribution to an outsider if he is into scientific research and sorry, if he is donating it to any scientific research organization and he is opting for 115 BAC, BAD, BAE, BAB, BAE for any alternate regime. All these three sections are not allowed. These three sections are not allowed, even though these four are allowed, even in old regime also. We will study this later on also, but just briefing you out in case you find any question, you should be able to solve it. No depreciation on the asset shall be allowed. See, if you are already claiming 100% deduction, why will, in the God's name, depreciation be allowed to you? It is not allowed. Sir, I have told you whatever the capex we are doing, we will be allowed deduction on that, but we are not allowed any deduction on land. For example, if you are buying a composite agreement, if you are doing any composite agreement for land and building, I am paying 100 crore to acquire land as well as building. Provision says whatever the fair market value of land is, whatever the fair market value of that land is, and fair market of value of building is, you have to split the consideration in that proportion. Whatever the purchase price that you have paid for land, you will not be allowed deduction. Whatever purchase price you have paid for building, you will be allowed deduction. So nature of the scientific expenditure is as good as unabsorbed depreciation. You can carry it for infinity. You can set off from any other heads, but you cannot set off such expenditure from salary. Sir, what if I have given donation to a company who is into scientific research and later on his status, his approval for being scientific has been revoked. That company fled away. What will happen to my deduction? Provision says nothing suspicious. You will still be allowed deduction. Even though you made donation at that time, such company was into existence. But as soon as you gave donation, company fled. So provision says you will still be allowed deduction, no issue whatsoever. Sir, what is the back-end process? Arjun, I'll get back to you. If I make the donation, the organization receiving the donation has to submit Form 10BD up to the 31st May of the assessment year. Up to the 31st May of the assessment year, that organization has to furnish Form 10BD up in their e-filing portal at PDGIT system. As soon as they furnish their Form 10BD, small Form 10BE gets generated. That small Form 10BE is given to every donor, and based on that Form 10BE, such donor will get deduction of such expenditure. Without Form 10BE, donor will not get any deduction. We'll study this topic again in trust topic. Right now, most important topic is if any asset is sold on which 100% deduction is claimed. If any asset is sold on which 100% deduction is claimed, what to do? Provision says sales amount or deduction claimed earlier, whichever is lower, shall be taken as PGBP. Whatever the sales amount is or deduction claimed earlier is taken, shall be taken as PGBP. Sir, in 33 AB, it was cost of asset. In 33 AB, we studied deduction claimed earlier shall become PGBP. Here we are saying sales amount or deduction claimed earlier shall become PGBP. So there is a difference in treatment of sale of an asset in case of 33 AB and section 35. Whatever the difference is given here. There is also a section 35 AD. Whatever the difference is with that section, we'll study therein. But right now, we must understand that if an asset on which 100% deduction has been taken is being sold, sir, sales amount or deduction claimed earlier shall become PGBP. That is how things. So this is all about section 35. Now, what question has been asked? Sir, when any amount is utilized for plant and machinery, does depreciation allowed? Right answer is no, Arjun. No, it is not allowed. That is what I said in this line. I said one line here. When amount is utilized for investment in depreciable asset like plant and machinery, then depreciation on such asset will not be allowed as deduction. I hope you got your answer. Are we clear till now? Any doubt till now? Wow, so the best part of the day. I hope your doubt is clear, Arjun. In case it is not clear, you can ask again. I will clear it. Yes, we are taking a break up to 9:55. See, normally I always give 2 minutes extra. Just we call it vyavhar in Hindi. Na, we call it vyavhar. It is just the relation between us. Even if you come 2 minutes late, it is allowed. Okay, so it is 9:55. You can take 9:55. Again, I want a single pinky promise from all of you that you are not going to use mobile phones during this break. I humbly request you all not to use any mobile phone because this is not going to help you at all. This is not going to help you at all. Okay, so no mobile phone. A pure break with just songs coming up, eating breakfast, doing nothing, no mobile phones attached because after the break we have to continue even for longer. So I hope you understand. See you guys after the break. Welcome back from break. Are we all back from break? Are we all back from break? Yes, sir, absolutely back from break. Just before going to break, we completed our section number 35. Proceeding further, section 35, ABA, ABB. Two of the very basic section, what it says, if you are buying any kind of telecommunication license or spectrum, telecommunication license and telecommunication spectrum. See, actually, these are intangible assets. You should ideally get depreciation on these assets, depreciation that too at the rate 15%, sorry, 25%. You should be getting depreciation. But what lawmakers do, they change the provisions. What lawmakers do, they change the provisions. See, telecommunication licenses are very big licenses. These licenses are about 5,000 crore, 10,000 crore for 30 years. So if lawmakers would allow 25% 1 year, they might suffer from getting taxes. So instead of just giving 25% depreciation, what they do is they allow depreciation over the period of the life. If license goes on for 30 years, you will get deduction of such license over 30 years. If that spectrum goes on for 40 years, you will get deduction over the 40 years. Whatever the number of years that such license or spectrum is in force, you will get deduction for for that long. Sir, for example, if I have commenced my operations and later on I am getting license, so from date of getting the license till the date of expiry of license, I will get deduction. If I have not commenced my operations, I have already taken license, but I will commence business later on. So from the date of getting the business commenced till the date of expiry, I will be getting the license. Just understand this example. For example, if I bought license on 1st April 2022 for 10 lakh rupees and it is applicable for 10 years. So how long will it take place? It will take place every year I will get 1 lakh rupees per annum deduction for such license. So if I buy license on 1st September 2022 and it is applicable for 10 years, see if I see effectively such license is in force for 11 years. 9 complete years. In 1 year, it will be applicable for 8 months, and in other year, it will be applicable for 4 months. So, all in all, if I see it is in force for 11 years, so I will get deduction of rupees 90,909 rupees every year. So, number of days the license is, number of years the license is in force, that number of years I will get the deduction. If license is in force even for 1 day, I will get deduction for that year, that too in equal installments. So, that is how things go. Clear till now? Yes, sir, absolutely clear. What is the tax treatment in case of sale of license? Whenever a license is being sold, how tax treatment take place? Hmm. 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 See, this is similar to what we had studied in case of power generating units. Like in case of power generating unit, whenever we used to have capital gain, some portion was transferred to PGBP, some portion was transferred to capital gain. Similarly, we do it here also. What is done here? For example, if we bought a license of rupees 1,000, here deduction for 1 year is 100 and written down value is 900. Now if we intend to sell full of this license, if we intend full of this license at rupees 700, it is apparent now 200 rupees loss will go to PGBP. If we intend to sell such license at 950, then 500 gain will be PGBP. This is loss, this is gain, this will go to PGBP. And if I sell the entire license, if I sell the entire license at rupees 1200, so 200 will go to capital gain and 100 will go to PGBP. Simple provision it is. The way we had studied for power generating units capital gain, similar treatment will go for Telecommunication license, telecommunication spectrum. If purchase price is 1000 and we are having WDV of 900 and we are selling it way below that, then whatever the differences will go to PGBP only. If our cost is 1000, if our WDV is 900, so 1000 is cost, WDV is 900, we are selling it somewhere between. So whatever the gain that we are incurring over and above the cost, over and above the WDV, whatever the profit that we are having will go to PGBP. But in case if we are selling it over and above the cost, then whatever the price that we are getting over and above the cost, that shall be transferred to capital gain and difference amount will go to PGBP. Sir, any doubt till now? Just comment down. Just comment down. Do you have any doubt till now? If you have any doubt till now, you must clear it because a thing has to be taught which is a bit in depth. Sir, clear, sir. Absolutely clear, clear. So this was the case when we used to sell the entire license. But there are certain cases where not entire license is being sold. Only a portion of them is sold. For example, 10% of the license is sold. For example, 50% of the license is sold. For example, 90% of the license is sold. There are certain cases where not entire license is sold, only a portion of that license is sold. It happens. It happens. Many times it happens that not the entire license is sold, only 50% of this license is sold, any X percentage of license is sold. Then what treatment will happen? See, provision says if part of the license is sold, then in case of gain, no change in treatment. For example, instead of selling this full license, if I sell half of the license or 20% of the license, provision says gain will not change. Treatment of gain will not change because it is reasonable now. It is reasonable that if I am having a license acquired at rupees 1000, WDV at 900, and I am selling part of the license. I am selling a part of the license at rupees 1200. So it is assumed now 200 should be capital gain and other should be PGBP, 100 should be PGBP. If I have entire license of rupees 900 and I'm selling only a part of it at 1200, so it is assumed now that difference should go to PGBP or capital gain. This is clear. There will be no change in treatment or in treatment in case of gain if part of the license is sold. But sir, if it is loss, what will happen? Just think of it as this way. For example, if we have a license acquired at rupees 1000, WDV is 900. Only 20%, 30%, 40% I am selling at 500 or 700. Provision says whatever the loss is, this is actually not the loss. This is actually not the loss. This is the WDV that shall continue to depreciate over the remaining life divided by 9. If 9 years are remaining, this we will get deduction over the 9 years. Provision says whenever we have a license which is being sold at a loss and only a part of the portion is sold, then whatever the loss has been sustained, that shall be allowed in number of years in which license is remaining. We will not get entire loss in this year because ultimately since license is pending for remaining life, we will get deduction over the remaining part of the license. Did you get this point or not? Whenever we have a license and that is being sold at a loss, only a part of it is being sold, we will get deduction over the remaining useful life of the license. That is what this point intends to teach us. Sir, we got your point. We absolutely got your point. Yes, sir, we got this point. Whenever you acquire any license, you do not get any kind of depreciation on such license. In case of amalgamation and demerger, remaining deduction is allowed to amalgamating company or resulting company. Simple provision it is. For example, if I have a license, I amalgamate with another entity, a provision says any person who has the license amalgamates with another person, so remaining deduction will be taken by the amalgamated company. So Section 35 specified businesses. So specified businesses are those businesses in which whatever capital expenditure you do, except for land or for goodwill or for financial instruments, whatever capital expenditure you do is eligible for 100% deduction. Whatever capex you do, 100% deduction on that. So if you have done deduction prior to commencement of business, you will get deduction from the date of commencement of business. If you have already commenced your business and now you are doing any expenditure, then you will be allowed deduction. Simple provision it is. Sir, what businesses are eligible for commencement? What businesses are eligible for this deduction? What all businesses are eligible for deduction? See, there are 14 odd businesses, out of which 12 to 13 businesses you must remember. 12 to 13 businesses you must remember, because sometimes examiner what does is it gives you a question relating to this specified business and people you don't even remember the names of such businesses. So for that matter, you must remember 14 odd businesses. Out of 14, you must remember 12 to 13. Let us try to remember it one by one. First of all, if anybody starts up with cold chain facility, if anybody commences a business of warehousing of agriculture produces, remember, edible oil production is not warehousing. It is not agriculture produce. Edible oil work is not agriculture. It is assumed that edible oil is not agriculture. It is assumed. Third, if somebody does transportation pipeline, he lays down the cross country pipeline between India to Dubai, India to Saudi Arabia, just for the transportation of natural oil or petroleum, natural gas and petroleum. Yes, sir. If somebody starts up with 2-star or bigger hotel, if somebody starts up with a hotel, with a hospital, with 100 plus patient beds, if somebody starts up, does affordable housing scheme or does construction under affordable housing scheme, if somebody starts up with a business of slum redevelopment scheme, you must have seen Adani has got the project to redevelop Dharavi at Mumbai, the biggest slum of Asia. Adani has got the project to redevelop Dharavi. People of Dharavi will be relocated. Adani will construct buildings in that project, and the people of the slum will get share in that properties. Provision says slum redevelopment scheme is also eligible for 35 AD deduction. So till now we have studied seven. Till now we have studied seven. What are those seven? First of all is cold chain facility. Second is agriculture warehousing of agriculture produce. Third one is cross country pipeline for transportation of petroleum and natural gas. Fourth one is 2-star or bigger hotel. Fifth one is 100 plus patient beds. Sixth one is slum redevelopment scheme, affordable housing scheme. Sixth and seventh are these. What are next seven businesses? First of all is if you are doing any fertilizer work, production of fertilizers, if you are doing warehousing of sugar, if you are doing any work for beekeeping or wax production, okay, sir. Then four businesses are not that good. I don't like taking names. First of all is cross country pipeline for transportation of slurry or transportation of slurry pipeline for transportation of iron ore. Then we have semiconductor wafer fabrication and manufacturing unit. What type of name it is? See, we have uh, new infrastructure facilities. We have inland container depots. So these four businesses are very bad names to be taken. Very bad names. I don't like them. But what do we do? We have to live. We have to remember now. So what 14 business I had just talked about, just try to recall with me. Just try to recall with me. Screen is not in front of us. Just try to recall. I am just taking off my eyes. I'm just taking off my specs, not eyes. Okay, I'm taking off my specs. I will try to remember 14. You just try to remember with me 14. Whatever number that you are able to remember, that is good. Whatever number that you are able to remember is good. First of all is, so starting away with cold chain facility. Okay, sir, cold chain facility. Second is agriculture warehousing of agriculture produce. Third one was laying down cross-country pipeline for transportation of natural gas and petroleum. Fourth one is 2-star or bigger hotel. Fifth one is 100 plus patient bed hospital. Sixth one is development of housing project under affordable housing scheme, development of housing project under slum redevelopment scheme, production of fertilizers, sugar, or beekeeping. Okay, there are 10 business I told. Oh, that bad ones. Poor names. Sir, laying down the slurry pipeline for transportation of iron ore. Okay, sir, we got that point. Sir, semiconductor wafer fabrication manufacturing unit. See, what bad, but what poor name it is. Sir, we had inland container depot. Okay, sir. And last one is new infrastructure facilities. How many you were able to recall? How many you were able to recall? Yeah, after taking off specs, I realized I look very bad after without specs. I look very bad. Okay. Again. First one, speak out, sir. Sir, speak out. Cold chain facility. Second. Sir. Warehousing of agriculture produce. Third. What was it? Cross country pipeline for transportation of. Arey, speak out. Now, speak out, sir. Cross country pipeline for transportation of petroleum and natural gas. Fourth one, sir. Two-star or bigger hotel. Arey, speak out. What are you waiting for? Fourth one is two-star or bigger hotel. Fifth one, fifth. What was the fifth one? What was the fifth one? 100 plus patient beds. Sixth one, sir, affordable housing scheme or slum redevelopment scheme. Six or seven done. Sir, what was the eighth one? Sir, fertilizers, pest fertilizers, production of fertilizers. Sir, eighth, warehousing of sugar. Ninth, tenth, beekeeping. Sir, beekeeping and production of wax. Sir, 10 we are done. Then four, poor names. Sir, slurry pipeline for transportation of iron ore. Then we had semiconductor wafer fabrication manufacturing unit. Then we had inland container depots, and at last we had infrastructure facility, new infrastructure facility. How many you were able to tell? How many you were able to remember? I want at least a 12 you must remember. Because not like you will be asked 14 businesses. You will not be asked 14 businesses. What you will be asked is sometimes in between of a long question, a business is given and you will not be able to realize whether it is specified business or not. So my intention is to you must at least remember these 14 names. So whenever any business, any names come, any name comes out of these business, you must be able to remember that it was specified business. 30. Perfect, Monisha. Perfect, Monisha. Sir, whenever you are doing any such businesses, whatever plant and machinery you acquire, that should be new plant and machinery. Sir, whatever imported plant and machinery you buy, new or old, it is considered as new only. Whatever plant and machinery you acquire second hand, sir, 20% of the total plant and machinery can be second hand. Otherwise, sir, every plant and machinery has to be new. Sir, whenever you have a business, whenever you start a business, that should not be splitting off or reconstruction of existing business. For example, my name, I was already having a hotel which was three-star hotel. All of a sudden, I changed myself, reconstructed myself, and started off calling new business. Provision says it is not eligible. It should be a new business. It should not be reconstruction or splitting off of the existing business. Sir, whenever you claim deduction under section 35 AD, no depreciation will be allowed. Whatever loss you are incurring from this specified business can be carried forward indefinitely. Whatever loss you are incurring from specified business has to be set off against the profit of specified business only. And sir, whatever profit and loss you are calculating on this specified business has to be calculated separately. Got it, sir. We got this point. Whenever you claim deduction under section 35 AD, whenever you claim deduction under section 35 AD, you are not allowed deduction under section 80 IA to RRB. On that businesses, you are not allowed any deduction. At last, if you have sold any asset, if you have sold any asset on which 35 AD deduction is claimed, then sales price of it will be taxable under PGBP. If you can contrast all these sections, if you remember, in 33 ABA, we told cost of deduction claimed earlier is taxable. In 35, we said sales price or deduction claimed earlier, which is whichever is lower is taxable. Here we are saying sales price is taxable. In all the three sections, we are talking different things. Just let me remind you. Tea, coffee, rubber. If you sell any business, if you sell any asset, cost of, sorry, deduction claimed earlier is taxable. In case of scientific research, Sale price, deduction claimed earlier. And in case of specified business, sales price. I want you all to write this line because sometimes you might get confused later on. It is better to write it down. It is better to write it down. Clear with this point? Yes, sir, clear. Sir, what if I have a hotel named Raj Mahal and I have a hotel called Shri Maya? Okay, just answer this question. It's a very good question to be answered. Okay, sir, we got this. Raj Mahal is a five-star hotel incorporated in 1992. For previous year 24-25, profit here is 10 crore. Whereas Sri Maya is a four-star hotel, previous year 24-25, loss was 5 crore. Incorporated 1st April 2024. My question to you all is, Sir, Raj Mahal has a profit of 10 crore. Sir, incorporated in 1992. Can it claim deduction under section 3580? Right answer is it cannot. Sir, but Sri Maya is the hotel where profit is where it is loss, where we have a loss. It is incorporated into section 1st April 2024. It is eligible for specified business deduction. Both of these hotels are being owned by Mr. Chandu. Both of these are being held by Mr. Chandu. My question to all of you is, can I set off losses of Sri Maya with Hotel Raj Mahal? Can I set off the losses of Sri Maya with Hotel Raj Mahal? Can I set it off? My question to you. Monisha says yes. Loss set off. Yes, by Monisha. See, I told specified business loss can be only set off against with the income of specified business. Specified business loss can be set off against only with the income of specified business. Sir, this a specified business? Is Shri Maya a specified business? Right answer is yes, Shri Maya is a specified business. Can I say Hotel Raj Mahal is a specified business? Right answer is yes, Hotel Raj Mahal is also a specified business, despite of the fact that it is not eligible for deduction. It is a specified business. It is a specified business, but it is not eligible for deduction. It is not eligible for deduction, but it is specified only now. So it losses from this business can be set off against losses of this businesses. It is allowed because even though it is not eligible for this Raj Mahal hotel is not eligible for deduction. This Raj Mahal is not eligible for deduction, but it is still a specified business now. Condition is losses from specified business can be set off against the incomes of specified business. Okay, sir, we got this point. There are certain conditions to be taken care. Sir, if we have a business of cross-country pipeline for transportation of natural gas and petroleum, sir, what it says, some portion of the pipeline should be given to others also. Na? See, if Reliance is laying down the pipeline between India to Dubai, so some portion should be given to Naira Petroleums, some portion should be given to uh, Reliance, or sorry, some portion should be given to Bharat Petroleum, some portion should be given to the other players also. Also, this business should be held by Indian company, Indian consortium, in any other board constituted under any act. This project should be approved by Petroleum and Natural Gas Board of India. Sir, for any hotel, for example, if I have hotel and I have outsourced the operation to somebody else. For example, if I have a hotel called Rahul Hotels, and instead of me operating such hotels, I have outsourced such hotel to somebody else like ITC just to manage it. Provision says whatever losses are being incurred will be allowed to owner only. If somebody manages such hotel, he will not be allowed deduction. Rather, I will be allowed any such losses or deductions. If we are having any new infrastructure facility, provision says this business should be owned by Indian company, Indian board or consortium. It should be entered with the approval of the central government. It should be entered with the approval of the central government. What is the new infra facilities or any kind of road? If you are developing any kind of road, toll road, bridge or rail system. If you are developing any kind of highway, housing project or related activities. If you are into water supply, water treatment, irrigation, sanitation, sewage and solid waste management. If you are developing any port, airport, inland waterways and related activities. These are nothing but considered as new infra facilities. New infra facilities. So transfer of assets. So this is a very good point. Sir, whenever I have a business which is a specified business, I must have taken deduction on every assets. I must have taken deduction on every asset. Right answer is yes, sir. I must have taken deduction on every asset. What if, sir, I am transferring such asset? First of all, we have already studied that if we are selling any such asset on which deduction is claimed, sales amount will become PGBP. Sales amount will become PGBP. Whenever I am transferring an asset on which deduction is claimed, so sales amount will become PGBP. Sir, what if asset is destroyed and insurance is received? Provision says whatever insurance amount that you are receiving will become PGBP. Whatever insurance sum you are receiving will become PGBP. Sir, we got this point. Sir, if we have a specified business and we have another specified businesses, we are just transferring asset from this specified business to another specified business. Provision says there will be no treatment. If you are just transferring assets, no treatment as such. But sir, if you are transferring from specified business to non-specified business, there is a special treatment. There is a special treatment to be given. Sir, how this special treatment will work out? Just take care. Just listen to this. So, for example, if we have a business covered under Section 35 AD and I am transferring such assets to other business which is not covered under Section 35 AD, then what to do? Provision says, provision says, if we have business, we are transferring it to other business which is not covered. So check whether transfer is within 8 years of acquisition of asset or beyond 8 years. If asset is being transferred after 8 years of acquisition, here there will be no different treatment. In case of transferor, no gain, no loss. For transferee, zero will become cost of acquisition, no depreciation allowed. It's very simple. If asset base is being transferred to any non-specified business after 8 years, there will be no capital gain, no PGBP, nothing in the hands of the transferor, and in the hands of the transferee, it will be nothing but sir, zero cost of acquisition, no depreciation allowed. But sir, what if asset is transferred within 8 years? Then what to do? Sir, cost of acquisition of asset minus notional depreciation will be taxable under PGBP. And whatever the differences will become cost of acquisition for non-specified business. So just understand this with an example. What I'm saying is, for example, if I have a business We have a two-star hotel. I acquired a building on 1st April 2020. I acquired such building at rupees 100 lakh rupees. See, whenever I acquire any building, I will get 100% deduction. So I must have claimed 100% deduction. I must have claimed 100% deduction. Right answer is yes, sir. I must have claimed 100% deduction. Sir, on building, I will be allowed depreciation for previous year 24, 25, 22, 23. 10% reduce 90 lakh is the 31st March 2022 value, 23 value. Minus depreciation, previous year 23, 24, 9 lakh. 81 will be depreciation for previous year 23, 24. That means the value for 31st March 2024 will become this. Or I should say 1st April 2024 value will become 81 lakh. Provision says whatever the actual cost was minus notional depreciation, 81 lakh will become PGBP for specified business, and this 81 lakh will become cost of acquisition for non-specified business. That means now onwards this non-specified business can claim deduction on this 81 lakh rupees. Is this point clear? Is this point clear, sir? I humbly request you all just to answer, is this point clear to you all? Because this is something that you might face difficulty studying later. If it is clear, please let me know. Or if you have any doubt, then to let me know so that we can work out on doubt also. Yes, sir, clear. Okay, so we got your point. Sir, if somebody is into agriculture extension project, if I have already agriculture work going on, I'm just extending my agriculture project. Provision says, then whatever capital expenditure you do, revenue expenditure you do, you will be allowed. You will get 100% reduction of that. But just remember, sir, maximum limit is 25 lakh rupees. And sir, land and building, deduction on land and building is not allowed. Deduction on land and building is not allowed. Other people, is it clear? Other people, is it clear? Provision says if you are working on skill development project for developing the skills of the employees or any other person, in case you incur any revenue expenditure, it is allowed. In case you incur any capital expenditure, it is also allowed. Sir, 100% deduction is allowed, but remember this deduction is only applicable for companies. And 100% of the expenditure except for land and building will be allowed. So if there is any reimbursement of such expenditure, then it shall not be allowed. Clear? Section 535 DD and DDA. Sir, for example, if I incur any kind of expenditure, if I incur any kind of expenditure on amalgamation, then what will happen? Provision says it will be allowed to next entity, it will be allowed to the entity who incurs. For example, if Blinkit amalgamates with Zomato. Sir, Zomato incurs the amalgamation expenses, so it will be allowed to Zomato only. If Blinkit incurs amalgamating expenses, it will become Zomato. It will be allowed to Zomato only. In case Reliance and Jio demerges from Reliance. Reliance incurs the expenditure, then Reliance will get deduction. If Jio incurs, then Jio will get deduction. Whatever entity claims the deduction, ultimately, if it exists after such conversion or after such amalgamation, it will get the deduction. It will be allowed to Indian company in 5 equal installments. Sir, it is allowed to the assessee who incurs the expenditure. Normally, it is allowed to the entity which is who incurs the expenditure. Expenses on voluntary retirement scheme, what this point says, provision says it is allowed to all the assessees. It is allowed to all SSCs. Sir, remember, VRS shall be allowed to deduction. Will VRS shall be allowed as deduction in 5 equal installments. So there is a minor issue that people face. See, in this topic, minor issues being faced by people. For example, if Reliance is there, take it. Not Reliance actually. For example, if we have Zomato and Blinkit. In previous year 21, 22, year 22, 23, Blinkit paid VRS of rupees 50 lakh. So this will be allowed in 5 equal installments. 10 lakh will be allowed every year. 10 lakh will be allowed every year. Right answer is yes, 10 lakh will be allowed every year. For previous year 24, 25, Blinkit's depreciation for year was 30 lakh. On 1st October 2024, Blinkit amalgamated with Zomato. Blinkit amalgamated with Zomato. This is a very important point. Remember, this is very important point. See, I have already told you that whenever there is an amalgamation, you have to ignore such amalgamation for the purpose of calculating depreciation. Whenever we are calculating depreciation, sir, we have to ignore the amalgamation impact, and then when complete depreciation is being calculated, this is splitted in the number of days in which the asset has been used by the old entity and asset has been used by the new entity. Let us assume reasonably that this number of days has been equal. So 15 lakh will be depreciation claimed by Blinkit. 15 lakh will be the depreciation claimed by the Zomato. This is the case that we have studied. But sir, for voluntary retirement scheme, for previous year 24, 25 deduction will be 10 lakh only now. For previous year 24, 25 deduction will be 10 lakh only. So this 10 lakh is not to be splitted. This 10 lakh is not to be splitted. This has to be taken. This has to be taken by the company which existed after amalgamation. Why, sir? See, depreciation is split because asset is being used partly in the other entity, partly in the other entity. Partly before amalgamation, it was used by Blinkit. After amalgamation, it was used by Zomato. Therefore, depreciation has to be split. But VRS is already a deduction that has been claimed by the Blinkit, that has been incurred by Blinkit. Now we are just getting deduction of such expenditure. Deduction will be only allowed to the entity that exists after amalgamation. It is not allowed to prior existing entities. Because the basic reason is that this should not be split in number of days, because ultimately number of days did not work for half year for this and half year for that other entity. Employees did not work in this way. Employee has already retired 2 years back. This is only the deduction that we are claiming. So deduction will be allowed to the newer entity only. Are you getting the difference? Some expenditures are there which is split on the basis of number of days, but some expenditure are only allowed flat to the new entity. Sometimes you may see this question, and this has been frequently asked by the examiner in recent examinations. Are you clear with this concept? Is it adding value to your concepts? Just tell me, is it adding value to your concept? I would ask you to hold this topic. Preliminary expenses, hold this topic. I will come back to this. Just tell me. Yes, for sure it is adding value to us, sir. It is for sure adding value. Thank you so much. Okay, continuing further. This is section 36. There are certain deductions that are to be allowed. Sir, what are those certain deductions? Provision says if you do any kind of stock insurance. If you do any kind of stock insurance, sir, it is allowed. Sir, if you do any kind of insurance, if company, yes, sir, absolutely. Perfect. Perfect. Sir, for example, if you are paying insurance, health insurance of your employees, if you are paying for health insurance of the employees, sir, what happens in this case? Provision says if you are paying any health insurance of your company, then it is allowed as an employer. It is allowed as an employer, but only thing that is to be taken care of is, sir, you have to pay it other than cash. You cannot pay health insurance in cash. You have to pay it other than cash. So we got this point. We got this point. That should not be paid in cash. It is assumed that if you pay insurance in cash, it should not be allowed. See, this is a point that you can skip. Primary cooperative society pays health insurance on the federal of pays insurance for the health insurance of the cattle's life insurance of the cattle's that it is allowed. What it says, just listen to this. It is not relevant for examination. See, for example, if we have primary cooperative society. Sir, for example, it is Monisha Society. It is a small society. It supplies milk to Amul. It is a small society which supply milk to Amul. Now Monisha is fearing that her cattles may die. Therefore, for her cattles, she incurred revenue. She incurred life insurance. See, for Monisha, these cattles are capital assets, and on these capital assets, she is paying life insurance. Life insurance is normally never allowed as deduction to anybody, not even on capital assets. Provision says it shall still be allowed. It shall still be allowed. This is specifically made allowed. This is specifically allowed if any primary cooperative society, if anybody is having primary cooperative society which is supplying milk or other assets to the federal cooperative society, then any insurance on such cattle or any insurance such livestock shall also be allowed. Sir, if you are paying any sum to the employees as bonus, if employer is paying any sum as bonus to employees, provision says any amount of bonus will be allowed. Even at the time of loss, also any kind of bonus shall be allowed as reduction. What you have to remember is, sir, that bonus should be paid up to the due date of RY. Such bonus should be paid up to the due date of RY. Interest on loan, what it says. Sir, whenever you pay interest on any loan, just check that whether such loan has been taken for depreciable asset or not. If such loan has been taken for depreciable assets, check whether you are paying interest is up to the date of put to use. If such interest is paid up to the date put to use, then it shall be added to cost. We have already studied this thing. But if interest is paid after put to use date, then it is allowed under section 36 or any other asset, any other interest other than depreciable asset is already allowed. It is always allowed section 36 under section 36. But sir, two things must be taken care of. If you are paying any interest, to scheduled bank, PFI, SFC, yani state financial corporation, state industrial corporations, or NBFCs, shall be allowed subject to 43B. That means such interest shall be paid up to the due date of ROI. Also, if you are taking any loan or if you are paying any interest for repayment of income tax, for payment of income tax, for payment of TDS, for payment of advance tax, it shall not be allowed. It shall always be disallowed because it is a personal expenditure. Discount on zero coupon bond. Discount on zero coupon bond, what it says. Sir, for example, if I issue zero coupon bond, then what happens, sir? Whatever the discount that is being given by me, that shall be allowed to me. Whatever discount that is being given by me, that shall be allowed to me. But sir, remember, discount will be allowed in those previous year. In those previous year, in which zero coupon bond exists, and discount shall be allowed on the basis of number of calendar months in which such zero coupon bond exists. For example, understand this with an example. For example, I have zero coupon bond worth face value is 100, and issue price is 30. So what is the discount amount? The discount amount is 30. Number of bonds that I have issued is 5,000. That means whatever discount in total I am offering is 1,50,000 rupees is the total discount that I am offering. Sir, got this point. So zero coupon bonds have been issued on 1st October 2024 and date of redemption is 30th September 2025. Date of issue of ZCB is 1/10/2024. Date of redemption is 39/2024. That means zero coupon bond exists for actually 12 months. Number of calendar months that are in force are 12 months. And out of these 12 months, if I am strictly asked, 6 months belong to previous year 24-25 and 6 months belong to previous year 25-26. So provision says whatever the discount is divided by number of total months that are in force multiplied by 6 months. That is number of months that are in force in previous year 24-25. Whatever the discount is, 6 out of 12 discount will be allowed in previous year 24-25 and 6 out of 12 discount will be allowed previous year 25-26. Basic pointer it is. Basic pointer it is. Sir, what if zero coupon bond are issued on 16/10/2024 and redeemed on 15/10/2025? How many months are in force? Just understand this. October, since it is 15 days or more, I shall take it as full month. November, December, Jan, Feb, March. This zero coupon bond is in force for 6 months in previous year 24/25. Similarly, April, May, June, July, August, September, October. This zero coupon bond is in force for 6 or 7 months in previous year 25/26. That means whatever the discount was shall be divided by 13 months, and for 6 months it will be allowed in previous year 24/25. 69,230 rupees worth discount shall be allowed in previous year 23/24, and balance will be allowed in previous year 25/26. Sir, bottom line is, sir, you have to check the number of calendar months for which such zero coupon bond is in force in that financial year. You have to check calendar months, and also while checking the calendar months, you have to check if calendar months has more than 15 days in a month, you will be allowed deduction for that complete month. Did you get this point? Did you get this point or not? Aye, aye, Captain, we got this. Aye, aye, Captain, we absolutely got this point. We absolutely got this point. Sir, another portion, employer's contribution for the benefit of the employees. Employer's contribution for the benefit of employees. Sir, most oftenly, employer does contribution from his own pockets for recognized provident fund. Employer does contribution for statutory provident fund. It is allowed. Sir, superannuation fund. It is allowed. Beautiful, Monisha. Beautiful. This is the energy I want that everybody says clear whenever I complete a topic. If employers do any contribution in gratuity fund, if employers do any contribution in any other law like ESIC, so normally provision says if employer does any such contribution, it shall be allowed to the employer provided employer pays such funds up to the due date of ROI. Employees Employers makes such payment up to the due date of ROI. So what I'm saying is employers benefit expenditure is always allowed. Employers contribution to employees benefit. Employers contribution to employees benefit shall always be allowed provided that it is paid to ROI, paid up to the rate of ROI. But sir, if employer contributes to such unrecognized provident fund, such a poor name, unrecognized provident fund, unrecognized superannuation fund, unapproved fund, or any other fund, then it shall not be allowed. Sir, why poor expressions? You will remember these expressions when you are writing exams. So if you are doing any kind of recognized contribution, recognized RPF, SPF, ASF, AGF, or any other fund like ESIC, then it is allowed but should be paid up to ROI. But if you are doing contribution in the poor names, unapproved, unrecognized, unapproved, any other fund which is not even recognized, then it shall be disallowed. It is clear, it is disallowed. Similarly, when employer's contribution to pension fund under section 80C(CD), see, employer contribute to pension fund of the employee. In that case, employers are allowed deduction. What amount of deduction they are allowed? Provision says whatever the actual contribution they make, or 14% of the salaries of the employee. Salary employee, basic salary plus dearness allowance in terms of retirement benefit, whichever is lower. Also, sir, this contribution to NPS should be paid up to the rate of ROI. Otherwise, this shall become disallowed. This shall become disallowed. Employees' contribution to PF, ESIC, and superannuation fund. What it says. See, normally employers are required to deposit some contribution out of their own pockets. Such employers' contribution is allowed if it is paid up to the due date of ROI. But sir, most of the time, some contribution is being made by the employer and some contribution is being made by the employee. So employee gives his share of contribution to the employer, and employer then in turns deposit this employee share also to the such respective fund. Yes, sir. So see, employer is given two responsibilities. He has to deposit his share. He has to deposit his share of the his share of the contribution to the fund. He has to deposit the employee share, which employee would be giving to him. He has to deposit employee shares also. Provision says whatever the employee share that he has received, he has to deposit such fund to such fund up to the due date of that fund. Employee Employee's contribution to any fund shall be deposited by the employer to the due date of that fund. So you don't have to wait for ROI here. You don't have to wait for ROI, sir. It will be completely disallowed if it is paid even one day after the due date of that fund. Normally, what is the due date? Sir, due date is the 15th of next month. For example, if fund is to be deposited for April, the 15th May is the date. If for May we have to deposit, then 15th June. Sir, next 15th of next month is the due date. 15th of next month is the due date for any fund. This is the amount by which amount should be deposited. Employees' contribution should be deposited. If it is deposited even after one day, I'm not saying after due date of ROI, nah, sir. Even if it is deposited after one day, so it will be disallowed. Okay, so we got this point. We got this point. We got this point. We got this point. Sir, what if I have certain animals in my business? For example, my business is of a dairy. I have a business of dairy. I just take out the milk from the cows and sell it outside. Or if I have a poultry farm where I have hens, where I take out the eggs and sell it outside. So if I have animals which are held as capital asset, animals which are not as stock in trade, these are held as capital asset. So if any of the person has assets which are held as capital assets, livestock held as capital asset, so they are never allowed depreciation on that. See, if it is a stock and trade, take PGBP, sir, all even depreciation will never be allowed. But if you are having livestock as capital asset, sir, you are not allowed depreciation. You are not allowed depreciation. Sir, what kind of deduction that you are allowed? Provision says whatever the cost of such asset is, cost of such asset is minus reduce the scrap value, whatever the scrap price you are getting. If you are selling it at no cost, reduce zero. If you are selling it at 50,000, reduce 50,000. If you are selling it to a slaughterhouse, whatever the price that slaughterhouse is giving to you, reduce that. So that amount of deduction will be that you will be getting in the year in which animal become permanently useless or dead. Whenever animal become permanently useless or they become dead, you will be allowed deduction in that year, that to cost minus scrap value. No depreciation whatsoever shall be allowed on such animals. And it is logical also now. See, if a calf is born, for example, calf, class 2, class 1, if a calf is born, whatever depreciation you are charging, actually that calf is not depreciable right now. Depreciation will commence after 5 years, 4 years when calf will grow big. So depreciation charging is illogical in this case. Therefore, deduction is allowed on the basis when it becomes completely useless or it becomes dead. Provision for bad debt. Any doubt till now? Any doubt till now? Oh, any doubt till now? Waiting and waiting and waiting for you all. See, I will not proceed unless you say clear. You must understand. I cannot see your faces. I cannot see your eyes. Only thing that I can see is your messages. So how will I understand that you are able to understand it well or not? How will I understand that you are just not just seeing the classes and just skipping it out? How will I understand? I will only understand with your messages. So it is not your choice to message, it is your mandate, it is your obligation to reply. Sir, we are understanding. We are understanding well. We are understanding beautifully. You need not to worry about it at all. Sir, bad debt, a debt that has gone bad. Provision says if you are making any kind of provisions for bad debt, sir, it is not allowed. It is not allowed, sir. If you are a bank, then it might be allowed, but otherwise it is not allowed. You must be very clear with this fact, sir. Provisions are not allowed in income tax. Clear, sir. Provisions are not allowed in income tax. Whatever provisions you create, unless it has been permitted by ICDS, you will not be allowed any provisions in income tax act. So what about actual bad debts? Actual bad debts are allowed. Actual bad debts are allowed, but only if they are relating to sales. If it relate to any kind of loan or any other actual bad debt, provision says it is not allowed unless your business is of money lending. Otherwise, any such bad debt will not. Only you are allowed bad debt with respect to sales. Sir, provision says you don't have to, you just have to write off your bad debt. You don't have to prove that debt has become bad. You never have to prove that debt has become bad. For example, I have to receive certain money from Monisha. I have to receive certain money from Monisha, and Monisha has denied that I'll not be paying to you any money. I'll not be paying to any money. Provision says I don't have to prove this to department that Monisha's debt has become bad. I just have to write it off. I just have to write her account off, and I will get the deduction. Provision says for claiming a bad debt, it is very logical point to understand this. For example, today I did yesterday last year I did sales to Monisha. For example, Monisha two sales. For example, 1 lakh. Ultimately, directly last year, I had offered sales of 1 lakh rupees. Ultimately, this is reflected in my PGBP or on which I have paid taxes. Provision says whenever you are claiming bad debt, you must have at least offered such income in your books of accounts. Then only you can claim bad debt. It is logical, now. It is logical to claim bad debt. You must have offered it in an income also, now. Then only next year we can claim bad debt to Monisha. 1 lakh and claim deduction 1 lakh. I will be saving taxes by 1 lakh. It becomes fittus. Fittus matlab nullified. Sir, it is very reasonable to ask that if you want deduction of bad debt, you must have at least offered income, no? If you have offered income, then only we can give you deduction of bad debt. Now, without any income, how can we give deduction of a bad debt? Sir, we got this point. We got your point to the fullest. Sir, it's clear. We got this point. Sir, you know what? Just taking an example out of nowhere. I was new to the industry. I started off a scheme called पहले इस्तेमाल करें फिर विश्वास करें. पहले इस्तेमाल करें फिर विश्वास करें. What it means? Just try my classes once. Just try my classes once. You watch all the lectures. You don't pay fees unless you are satisfied. I had started a scheme. I had started a scheme. You watch all my lectures and only pay fees only if you are satisfied. Mr. Chandu, for instance, came and bought my classes. Did not pay any money. Watched the classes. He was extremely satisfied. He was extremely satisfied. But he did not want to pay money. Did not want to pay money. He said, "Sir, I am not satisfied. I am not satisfied. I don't want to pay." I was very sad. I had already recognized income in my hands. I had already recognized sales, but it is not, I am not receiving any money because Chandu had denied to pay any money. Chandu had denied to pay any money. I was crying out loud. You know what? You know what? After 4 to 5 years, many such instances happened to me, and I had to close down my teaching. I had to close down my teaching. 40 years down the line, when Chandu became director of Deloitte India, International Taxation Department, 40 years down the line, when Chandu became director of Deloitte India, International Taxation, every work that has to be done in India has to be authorized by Chandu. And Chandu could recollect how basics of international taxation, how basics of direct taxation were taught in class. Because of basics of these class, he was able to recall everything after 40 years even. He felt thankful. He felt thankful and he felt sorry at the same time. He felt like I should repay my money back. I should repay the sir his money back. He gave lots and lots of efforts just for teaching us DD. I should pay him money. I should pay him money. 40 years after the line, Chandu paid me 5 lakh rupees in return. Chandu paid me 5 lakh rupees in return. Sir, what will be the treatment of this transaction? I had offered such sales in my books of accounts. I had paid taxes in 1 year. Next year, I claimed bad debt because if they were not receivable, I had written off that bad debt. Now my business is closed. Now my business is closed. I had I had closed my business. I had stopped teaching. In that case, if there is any recovery of bad debt, will it be taxable in my hands? Even if my business is closed, sir, will it be taxable in my hands? My question to all of you is, will that bad debt recovery be taxable even if I don't have business in existence? Right answer is yes, it will be taxable. Chandu says no. Right answer is yes, it will be taxable. Sir, even if business exists or not, sir, bad debt recovery shall become taxable. Absolutely correct, Bhargavi. If that is your name, my bad. If I am taking it wrong, Bhargavi, it will be taxable. Yes, you are correct. Your business is in existence or not is irrelevant. In whatever year you have recovery, it will become taxable. In whatever year, if you have any recovery of bad debt, it will be. Oh my God, sir, this is a big, big thing. My answer is yes, that is how things go. Recovery of bad debt is taxable in the year in which taxable. So taxable amount is only when it is recovered in excess of whatever written office. This provision shall apply even if business and profession is not existence year the year in which debt is recovered. In whatever year debt is being recovered, sir, for example, in 2060, my debt has been recovered. It shall still be taxable there and then and there. Oh my God. Oh my God. Okay, sir, got this point. Bad debt leave. Sir, what happens is this is a crucial point. Understand this. For example, bad debt lien was 1,000. For example, I claimed that 1,000 rupees is bad. Department allowed 100 for complete 1,000 as bad debt. Now, whatever recovery I do, for example, 300 recovery I do, it will become taxable. If I do recovery of 500, it will become taxable. Sir, whatever recovery I do shall become taxable. But sir, what if I claim bad debt rupees 1,000 and department allows only 700? Department allows only 700. Just imagine, I am asking that the bad debt is 1,000. Department is saying no, no, bad debt is 700 because department is optimistic that 300 will be received more. 300 is to be received. Now, in reality, what happens is I just received 200. Department thinks I will be receiving 300. I only receive 200. So that means 100 rupees are more actual bad debt. It shall be allowed as and when recovery of 200 is done. Oh. If department thinks 300 will be receivable and it only allowed me 700 and in turn I just received 200. So 200, 100 is actual bad debt more now. It shall be allowed in the year in which, sir, recovery of 200 is done. Also, sir, what if I asked for the bad debt 1,000, department allowed only 700? I recovered 500. What will happen? Department thought that actual bad debt would have been 300. Sorry, actual bad debt. Department thought that I would recover 300. In turn, I recovered 500. So whatever the excess recovery that I have done shall become taxable. Logical? Logical it is? Yes, sir, absolutely logical. Absolutely logical. This is how recovery of bad debt turns out to be. Now I'm reframing the question. Now I'm reframing a question. For example, earlier Chandu bought classes of mine, did not pay any money. Chandu bought my classes and did not pay me any money because he was opting classes अंदर पहले विश्वास करे पहले इस्तेमाल करे फिर विश्वास करे scheme first try and then buy, first try and then buy scheme he was buying. But sir, he bought classes from Fast Institute. Fast Institute is a partnership formed between Sarthak sir, Adish sir, Riddhi madam, and Rahul. We all collectively are called SAR. In SAR, in Hindi, SAR implies the conclusion of CA final. We all are SAR. Provision says, provision says, if Chandu bought classes from SAR and did not pay any money. So who has claimed the bad debt? Bad debt has been claimed by Fast. Income has been offered by the Fast. Bad debt has been claimed by Fast. But later on, because of certain disagreements, later on with certain over the period of times, sir, Fast dissolved. And after 40 years, Chandu paid 40 years. Chandu paid 5 lakh rupees to Rahul, who was a partner. Who was a partner. Now tell me, will this 5 lakh be taxable in my hands or it will taxable be in the hands of firms? Firm. I'll come to that, Arjun. Just answer this point. I'll come back to that. I'll come back to that, Arjun. See, what happens is Fast did a sale to Arjun, it has recognized sale. But later on, Arjun disallowed to make payment. Sorry, Fast made sales to Chandu and he ultimately disallowed the payment. He did not make any payment. So Fast claimed bad debt. Sales has been booked. Bad debt has been booked. Both have been allowed. Now recovery is not being done by Fast. Recovery is done by the partner and firm is not into existence. Will that recovery be taxable in the hands of firm? Will that recovery be taxable in the hands of partner? Or it will not be taxable at all? This is my question. Taxable in the assessee who claimed the deduction and that assessee is not in existence. Arjun, that assessee is not in existence. What to do? Not taxable. Right answer is yes, sir. It is not taxable. And dear Lord Arjun, you said very good answer. I must appreciate your answer. Sir, you have written very beautiful line that it is only taxable in the hands of the assessee who claimed the deduction. Whenever you claim bad debt, recovery will be taxable in your hands only. In nobody else's hand, it will be taxable. Sir, we got this point. Since partnership firm claimed the deduction, partnership firm claimed for bad debt, recovery shall be taxable in the hands of firm only. It will not be taxable. It will never be taxable in the hands of the partners. So we got this point. We got this point to the fullest. Arjun's doubt was here. For example, I did sales of 1,000. My bad debt was 1,000. Actual bad debt was 1,000. I was thinking 1,000. I'm not going to receive anything. But department said no, 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 no. We will allow bad debt of rupees 700. Allowed was just 700. Allowed was 700. Later on, I recovered 200. See, department was of the view that I am going to receive 300. Therefore, it disallowed 300. Department was of the view that I am going to recover 300. Therefore, it disallowed 300 because it was thinking that I will be receiving 300. Therefore, department disallowed 300. Now I only recover 200 now. My 300 were disallowed because department thought I will be receiving 300. But I received only 200 now. 100 I got less now. 100 is the amount that I received less. So for that matter, 100 should be allowed right away. It was disallowed earlier. So this should be allowed now because now it is sure, it is for sure that I'm not going to receive any more 100 amount. So for that matter, it should be allowed in the year in which we realize that no more money is recoverable. I hope you got the answer, Arjun. Bad debt calculation in case of banks. How bad debt is being calculated in case of banks? Sir, for Indian banks, whether understood, sir, perfect. For Indian banks, scheduled, non-scheduled cooperative bank provisions is whatever the GTI is, take 8.5% before deduction. Before deduction, take 8.5% of GTI. Yes, sir, we got this point. Before deduction, take 8.5% of GTI. Plus, if such bank has rural branches, has branches in rural India, clear, sir. Perfect, perfect, Monisha. See, if we have a bank, okay, then on such banks, provision for bad debt is also allowed. Normally, provision for bad debt is allowed to nobody, but provision is allowed to the banks. If such bank is a scheduled bank, cooperative bank, or any kind of non-scheduled bank, then whatever the GTI is, 8.5% of such GTI shall be allowed as deduction. Also remember, whatever the rural branches are, whatever rural branches are, for example, SBI has 1 lakh branches all over the India. Out of that 1 lakh branches, 25,000 are branches in rural India. Provision is whatever the advances are given by such rural branches, 10% of such advances shall also be allowed as bad debt, because it is assumed now rural whatever the rural advance that they are giving. In most of the cases, it is not being recovered. So 10% of the aggregate average of the advance by the rural branch shall also be allowed as deduction, shall be allowed as provisioning. In case of foreign bank, PFI, State Industrial Investment Corporation (NBFC), 5% of GTI before the deduction shall be allowed. So normally 8.5 plus 10% of the advances, or in case of other banks, it is 5% of GTI. Just remember, sir, whenever we are allowed provisions, whenever we are allowed any provision, then actual expenditure is always firstly adjusted from this provision and then it is allowed to P&L. For example, if a bank is allowed a provision of rupees 1 lakh crore, if bank is being allowed provision of 1 lakh crore and actual bad debt are just 1 lakh 20,000 crore. Provision is first of all 1 lakh 20,000 crore is to be adjusted from this provision, and then balance remaining 20,000 crore, whatever remains, shall be allowed in P&L, shall be allowed as deduction later on. But first of all, always expenditure has to be set off from provision and then it is allowed as deduction. Simple provision. Expenses on promotion of family planning. Sir, if any of the companies, sir, this section is only applicable to company, remember. If any of the company does any expenditure on family planning, sir, revenue expenditure is allowed 100%, capital expenditure is allowed in 5 equal installments. Sir, this is similar to what unabsorbed depreciation is. Sir, for it can be set off from any other rate except for salary. It can be carried forward to any number of years. It is allowed. In case of amalgamation, demerger, the balance of family planning expenditure is allowed to successor company. So security transaction tax. What is security transaction tax? Whenever you buy securities on a recognized stock exchange, then at the time of buying, at the time of selling, sir, you are required to pay a security transaction tax. Under the head capital gain, under the income from capital gain, I have told you that this security transaction tax is not allowed as deduction in any case in case asset is held as capital asset. If you have Reliance shares held as capital asset, then if you pay security transaction tax any point of time, sir, it is a dead expense. You can neither reduce from sales, you can nor add it to cost, or you can not even claim such expenditure as transfer expenses. In capital gain, it is a dead loss. But if you have securities held as stock in trade, remember my words. If you have securities held as stock in trade, sir, whatever STT you have paid, you will be allowed deduction. Whatever STT you have paid, you will be allowed deduction, but only if they are held as stock in trade. Transfer to general reserve, what it says? Sir, if any of the company is involved in long-term financing, clear, sir? Nice. If any of the company, if any of the finance company is involved in long-term financing, that is 5 years or more, if any of the company is into long-term finance, sir, it is allowed a special deduction, 20% of PGBP. Only core businesses before this deduction, whatever the PGBP is, take 20% of that. Twice the share capital plus general reserve minus opening balance of this reserve, or amount transferred to general reserve, whichever is lower. Sir, whatever the amount you are transferring, that you have to take. Take PGBP before this deduction 20%, and take 2x of share capital plus general reserve minus opening balance, whatever the lower of three comes out shall be allowed. Sir, if you take out any money from this reserve, that shall become taxable. So actually, there is no benefit of this provision, but it is given. You need if you remember, if you want to remember, you can remember. Otherwise, it is not relevant. Purchase of sugar cane, you can ignore. Sir, mark to mark losses, sir, what it is. Just understand this point. Mark to mark losses, what it is. Sir, for example, what mark to mark losses are. Sir, are you aware that whenever you hold securities as stock in trade, whenever you hold securities as stock in trade, such securities are valued as per accounting standard number 2, inventory valuation. As per books of accounts, every year you have to recognize it at stock or NRV, whichever is lower. Like other inventories, you have to recognize securities also at cost or NRV, whichever is lower. Sir, for example, during the year, you had five securities, so two securities. For example, Reliance share acquired 1000 NRV, 1200. You had Wipro share acquired 500 NRV, 450. Okay. As per accounting standard 2, what will be the valuation? What will be the valuation? Accounting standard says cost or NRV, whichever is lower. Accounting standard says cost or NRV, whichever is lower. Reliance will be recorded at 1000. Wipro will be recorded at 450. As per accounting standard 2, whatever the valuation turns out to be will be 1450. Our actual cost was sir 1500. Do we have any kind of loss here? Do we have any kind of loss here? Yes, sir. Any kind of loss. We have any kind of loss. Sir, will this loss be allowed? Will this loss be allowed? For sake of betterment, take it as 250. Take it as 250. Will this loss of 250 be allowed? Will this loss of 250 be allowed to us? My question to you is, if I do valuation of inventory as per accounting standard, will this loss be allowed to me? This loss of 250 lakh. Right answer is no, it will not be allowed. Not allowed. But sir, if we have mark to mark losses on account of ICDS, what ICDS wants us to do in case of security valuation, it wants us to categorically value at stock or NRV. ICDS wants us the total of cost, total of NRV, whichever is lower, 1450. ICDS wants us to recognize at 1450. While recognizing at ICDS, sir, we have a loss of 50 lakh, 50 rupees. Is it allowed? Right answer is yes, it is allowed. So, while calculating things at market value or while doing mark to market, in that case, you might have losses. In all the cases, whenever you do mark to market losses, it is not allowed by income tax. But if you are doing mark to market losses, if you are doing mark to market losses as per ICDS, then it is allowed, but otherwise it is not allowed in any of the cases. Oh my god! Oh my god, sir, got this point. We seriously got this point like never before. Okay, sir, we got this point. Section 37. Section 37, so section 37, what it says. Section 37 says a general expenditure. So any expenditure that has been not allowed in above provision, section 30, section 31, section 32, section 33 AV, section 35, section 35 AD, section 35 DDA, section 35 DD, section 35 D, section 35 triple C, section 35 triple CD, section 36. Whenever any expenditure is not allowed in above sections, whenever expenditure is not allowed in above sections, it will be allowed under section 37, provided such expenditure fulfills three conditions. What are those three conditions? First of all, such expenditure should be commercial in nature, business in nature, exclusively for business and profession. No personal expenditure should be debited. No personal expenditure should be allowed. Only expenditure that is exclusively for the business shall be allowed. Second, if such expenditure is a revenue in nature, if such expenditure is revenue in nature, no capital expenditure will be allowed. And at last, sir, expenditure should be legal. For example, Monisha was driving like brum, 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 400 times, 200 kilometers per hour. 200 kilometers per hour, she was driving her scooty. She was trying to stop her scooty by her legs. Okay. All of a sudden, a police wala came in front of her. Police wala came in front of her and asked Monisha a challan of rupees 1500 for over speeding her scooty. Police wala asked 1500 rupees to Monisha for over speeding of scooty. Monisha was required to pay at least 500 rupees in cash, that to bribe. Sir, will that expenditure be allowed? Right answer is no, sir. It is a kind of bribery expense. It is a kind of illegal expense that shall not be allowed. Actually, there were too many memes. No, not making stereotype in any sense, but there were a lot of memes. I guess 2 or 3 years back, where girls were portrayed like stopping scooty with her legs, indicating left and going to right without helmet, driving, and just for crossing the road, she used to request somebody else. So there were too many memes. Not making any stereotype, but just giving example. If you pay any kind of expenditure which is illegal in nature, you will not be allowed deduction of such expenditure. Sir, sir, if you are any of the medical representative or if you are any of the company who pays any perquisite, if you are any of the company who pays perquisites to the doctors, for example, if I am Cipla, I want doctors to recommend my medicine. I want doctors to recommend my medicine. Provision says most of the time what I will do, I will give some cash to doctors. Most of the times what I will do, I will fix the perquisites to doctors. Most of the times what I will do, I will give some trips to these doctors. I will give some concert tickets to them so that they might recommend my medicine. In that case, provision says any such commission, any such perquisite, any such incentive paid, any such free sample given to them, any such freebie shall be disallowed expenditure, completely disallowed. Sir, we have a list of expenditure that shall either be allowed, that shall either be disallowed. There is a list given to us. We need to just read that list multiple times because one or two or three adjustments will come from this list for sure. Sir, first of all, corporate social responsibility, whenever you incur any expenditure of corporate social responsibility. Section 135 of Companies Act. 2% of the net profit is to be contributed for CSR activities in case of specified companies. Sir, you have to do that expenditure, but that is considered a personal expenditure. No deduction is allowed of that expenditure. Okay. In case, sir, you donate such money to PM Care Fund. In that case, you can claim Section 80D deduction, but otherwise it will not be allowed as deduction in computing PGBP. Sir, if you are giving any gift to employees, it is allowed expenditure. If you are paying any dividend, if you are paying any dividend, sir, it shall not be allowed. Sir, it is logical. Now, dividend is not even your expense. It is appropriation of profit. It is appropriation of profit. So, in case you debit any expenditure of dividend in P&L, it is not allowed. Sir, in case you pay any sum for increasing the authorized share capital, sir, it is considered as capital expenditure. Increasing authorized share capital is always considered as capital expenditure. It is not allowed. It is capital expenditure not allowed. If you do any kind of festival, for example, Pongal, if you want to if you want to celebrate Pongal in office, provision says it is allowed. Any kind of expenditure on account of festival celebration is allowed. Any kind of secret commission that I'm paying, any kind of bribe, any kind of hafta vasuli that I'm paying. You know hafta vasuli. Many of the gangsters in Mumbai vasuli do hafta vasuli. They force businessmen just to pay 1 lakh rupees, 2 lakh rupees, just to exist in that area, just to avoid any kind of any criminal activities. Just from getting safe, they have to pay hafta money. So provision says any kind of hafta money paid shall also be disallowed. Provision says any kind of IPO related expenditure, FPO related expenditure, right ratio related expenditure are not allowed. Why, sir? Provision says any kind of expenditure on which share capital increases plus bank increases, sir, that shall be disallowed. For example, IPO, sir, in case of IPO, sir, share capital increases, bank increases. In case of FPO, sir, share capital increases, bank increases. In case of right, share capital increases, bank increases. But sir, any expenditure likewise buyback. Sir, in case of buyback, does share capital increases? Right answer is no. But whether bank increases, no. So this way buyback is allowed. In case of bonus, sir, share capital increases. Right answer is yes. Bank increases, no. So in that case, it is also allowed. In case of loans, sir, does share capital increases? No. But whether bank increases, right answer is yes. So in that case, this expenditure is allowed. Sir, in cases where both of them are tick, then in that case, it is disallowed expenditure. In case either of them is no or both of them are no, sir, either bank does not increase or either, sir, share capital does not increase, sir, in that case, it shall be allowed expenditure. Provision for loss of subsidiary. Sir, this is too much. If your subsidiary is having certain losses and you are making provision of that losses, will that be allowed? It answer is no. Any loss of subsidiary shall not be allowed to you. It shall not be, it shall never be allowed to you. Sir, we got your point. If you are having any deferred tax in your P&L, will that be allowed? No, no. If you have any diminution in the value of assets, sir, it will not be allowed. What are you saying? If you have any certain liabilities, Arey Baba, it will not be allowed. If you are doing any expenditure for the advertisement in brochure, souvenir, newspaper, pamphlet of a political party, provision says it is not allowed. Not allowed. But if you are a company can claim 80 GGB as deduction if you are doing any advertisement in political party's brochure. Sir, can an individual claim deduction under Section 80 GGC? Right answer is for advertisement purpose, they cannot claim. For advertisement purposes, they cannot claim. Only a company can claim under 80 GGB. An individual cannot claim under 80 GGC for such expenditure. Sir, normally long-term provisions are always disallowed in income tax. Listen. Normally, long-term provisions are always disallowed in Companies Act, but provision says if any such of the long-term provision are based on fair estimate, reasonable certainty, and are based on ICDS, then they will be allowed. Otherwise, they are always disallowed. But if they are based on reasonable estimates and certainty, then in that case, it will be allowed. Any long-term provision like gratuity made as per actuarial valuation always disallowed. Always disallowed. Interest on loan taken for income tax, arey baba, always disallowed. Litigation expenses for income tax, sir, litigation expenses are commercial in nature, sir, it is allowed. Cash embezzlement, sir, somebody stole cash from my box where I keep cash. Somebody stole that. Provision says that it is also allowed expenditure, provided that it will be allowed only in the year in which it is discovered that cash has been stolen. See, if you do not even know that cash has been stolen or not, so in that case, it will not be allowed. Sir, for example, expenses relating to not related project and project abandonment, sir, it shall not be allowed. So what happens is, for example, if Arjun has a business of garments, he's a very successful businessman, very successful entrepreneur in the field of garments, apparel. Now he want to go global. Now he want to go global. He want to continue his garment brand in USA also, in United Kingdom also. Will he be allowed any expenditure of any business done there? Right answer is he shall be allowed. If you have existing business and you just want to expand the existing business, for example, Arjun wants to go to USA, wherein he wants to set up a branch where he will be selling his clothes. Will that be allowed expenditure? Right answer is it should be allowed expenditure. Even if later on such business shall not materialize, even if he may not continue such business in future, he will still be allowed deduction of such expenditure. He will still be allowed deduction of such expenditure. Sir, but what if Arjun wants to start a different business altogether? For example, if he's having business of apparel, now in USA he wants to go for shoe businesses, footwear businesses. Will that deduction be allowed? Right answer is why? Why, sir? Why will that be allowed? Why in the heavens name such expenditure be allowed? Just think of the business. Just think of a business. I am a garment business. Any expenditure relating to garment business should be kept on me. Any expenditure with respect to garment business should be allowed to me. But why will I face any loss that has incurred on account of apparel business? Why should it be allowed? Right answer is it will not be allowed. If I am having a business of anything and I pay any expenditure for other business line, then that expenditure shall never be allowed to existing business or old business. That shall be only allowed to the new business. If that business materializes, if that business does not materializes, such expenditure is disallowed. Also, for example, if I have a business of garment, I am starting off with a business of shoes. If such business does not materializes, then in that case, expenditure will not be allowed. But if such business is materialized, then such expenditure shall be allowed under section 35D called preliminary expenses, which says any expenditure is allowed to resident assessee who incurs preliminary expenses before the commencement of the business or extension of new unit, sir, it is allowed. Sir, what are preliminary expenses? Feasibility report, whether business will work or not, market survey, engineering services, drafting MOA, legal fees, expenses related to public issue, or any other expenses as CBDT may prescribe. What is the amount of deduction that one may get in case of preliminary expenses? Provision says if you are any resident person other than company, if you are any resident person other than company, sir, you will be allowed preliminary expenses actual amount or 5% of cost of project. Actual preliminary expenses or 5% of cost of project, whichever is lower. Actual preliminary expenses or 5% of cost of project, whichever is lower, you will be allowed. Sir, in case of company, you are allowed cost of project or capital employed, whichever is higher, and then take 5% and compare actual, whichever is lower. It is simple point, not issuistic as such. Whatever the preliminary expenses allowed taken out are shall be allowed in five equal installments. Shall be allowed in five equal installments. Sir, we got this point. We absolutely got this point. See, actual or cost of project ka 5%, whichever is lower. In case of company, take for cost of project or capital employed, whichever is higher, and multiply it 5% and compare it with actual, whichever is lower, you will get deduction. Simple point it is. You will be allowed in five equal installments. So two things to be taken care of is first of all is what is cost of project and what is capital employed. Cost of project imply fixed asset. Whatever the fixed assets are there in new business are considered as whatever the fixed business are there in new business are called cost of project. Take 5% of that. Whatever the cost of project is, take 5% of that. What is capital employed? Provision says any kind of share capital, any kind of long-term borrowings, long-term loans, long-term debentures, any kind of long-term deposits. These are capital. These are capital employed. So a very important thing while computing the capital employed, never ever include reserves and surplus and security deposit. If it is written in your book, well done. If it is not written, I request you to write it down. This is a key area where student must take care always while computing preliminary expenses and calculating capital employed. Never ever include reserves, surplus, and security premium. This was judgment in case of Berger Paints Limited, Supreme Court. Supreme Court gave a judgment that while computing the capital employed for the purpose of preliminary expenses, only amount that shall be allowed is share capital, long-term borrowings, long-term long-term borrowings, which include any kind of loan, which include any kind of deposits, debentures. No reserves and surplus shall be allowed. No uh, security premium shall be allowed in case while computing capital employed. Sir, audit is mandatory whenever you incur expenditure. Preliminary expenditure audit is mandatory, but for company and cooperative it is not mandatory. Why, sir? Why not mandatory? Because they are already mandated. They already have to get their books of accounts audited in their respective acts. They already have to get their books of accounts audited under their respective acts. So for them, it is not mandatory. In case of amalgamation demerger, whenever any expenditure is incurred by the old entity, it shall be allowed to the newer entity in case of any amalgamation or demerger. Continuing further, sir, we got this point. Sir, for example, now my question to you all is, for example, how many of you know the emerging actor Kangana Ranaut? Do you know? An actress, a film producer, a star, a director, a fashion designer, and a beautiful member of parliament from Mandi, Honorable Padma Shri Kangana Ranaut. How many of you know that? No one. How many of you know Kangana Ranaut? How many of you know? Yes, sir. Everybody know. Everybody know. Who doesn't know that lady? That lady who don't know how to speak, what to speak. Everybody knows about her. Yes, sir. We know her about her. See, after the extreme success, after the extreme success of Mani Karnika, after the extreme success of Emergency, the biopic of Indira Gandhi, she intended she intended to make a movie on Kalpana Chawla named Meri Kalpana. Named My Kalpana, she intended to make a movie on Kalpana Chawla. She made the movie. She did production of her own self. She directed the movie. She became the lead actress in the movie. That movie was subject to censor board. That movie was subject to censor board's approval. As soon as it went to censor board, people at censor board were thinking of the least of the bad words that they could say. They were saying this should not be said, this should not be said. Everything was cut, everything was cut. If that movie would have come out, then BJP might have lost Indian elections. Every election. That was such a poor movie that it was. Such a defamation. It was such a poor movie. That movie was forced to be abandoned for Kangana Ranaut, whose business is of movie making. She has to abandon a film. She has to abandon a film just because that was too poor, too poor to exist. Any expenditure incurred on account of such movie will be allowed or disallowed. Right answer is it shall be allowed because it is your existing business. Any expenditure incurred on existing business, if such existing business does not materialize, it shall be allowed. It shall be allowed. Sir, in case of retrenchment commission, what it says retrenchment commission. For example, what happens if we have long run recession or if we are closing one of the unit? Sir, we lay off many employees. We lay off many employees. For that matter, we have to pay the retrenchment commission so that we have to pay salary for 2 or 3 months of to these employees so that they can find new jobs. So whenever you pay retrenchment commission on closure of business, it is not allowed as expenditure. But if you incur any expenditure on account of closure of units, then it is allowed. Did we got this point. Sir, if you pay any salary to the directors which is in excess to the limit prescribed in Companies Act, it is disallowed. If you do any prior paid expenditure, it is allowed. Sir, if you do any compounding fees, it is normally not allowed. Sir, for example, one day, one day, Arjun was the one drinking the magical drink, drinking the magical drink that sent him to the beautiful heaven. And after drinking that magical drink, he started driving. He started driving. Later on, while driving, brum, 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 he was stuck. He was caught by a police officer. He had to give a certain test just to check whether he's okay or not. In test also, he failed and he was put into the bars. Now, whom do he call? Whom do he call? Arjun immediately called me. I said, he's my student only. What do I do? At night, 2 p.m., I had to go to police station just to rescue Arjun. Police officer said, we will charge 10 lakh rupees to leave him. I said, I only have 50 rupees. Police wala said, minimum, I want 5 lakh. I said, I can only give 100 rupees. Police wala said, don't bargain for your student. He asked at least for 2 lakh. I said, I only can give 1,000 rupees. At middle, there was an agreement at 50,000 rupees. Police wala came today, 50,000 rupees. I increased my bid to 50,000 rupees. After paying 50,000 rupees, Arjun got relieved. Arjun got relieved from the bars. This concept is called compounding of an offense. We will study this in detail late in the later part of the batch. But so this is called compounding of an offense. If you pay any kind of compounding fees, which prevents you from jail to just by paying the fees, it is called compounding. In Hindi, we call it zamanat. Zamanat dena, zamanat ka paisa dena. Provision says if you pay any kind of compounding fees, that is always disallowed. Always disallowed. Compounding for any offense, compounding of any income tax, it is always disallowed. Sir, if you are making any payment to the consultant for opening of new business, Hare Baba, it is not allowed. Sir, if such business materializes, then in that case, you can take relevant expense deduction in that business, but otherwise, for existing business, it is disallowed. Sir, for example, there was a doctor who was a heart surgeon. He was a heart surgeon. His business was to do heart surgeries and earn income from that. One day, he himself suffered heart attack. He himself suffered heart attack. He had to get a new heart. So what he did was he charged all of such surgeries expenditure, all of such hearts expenditure to P&L account by claiming that this is his important aspect, this is the important function of the business, this is his business expenditure. Because of this new heart, he is able to perform the surgeries now. For that matter, heart is relevant for him for to do any business. In that case, he charged such heart surgery expenditure to business expenditure. High Court disallowed. High Court disallowed that even if you are paying money for your heart surgery, it is your personal expenditure only. It is not a business. It is not a business expenditure. Sir, for example, I went to Mr. Reddy, Dr. Reddy. I went to Dr. Reddy. I was sick. I was having a knee knock. I was having a knee pain. I went to Dr. Reddy. Dr. Reddy sent me to Gupta ji. Gupta ji X-ray wala. Dr. Reddy asked me to get my knee X-rayed just to know the what issue it is. I went to Gupta ji. I paid Gupta ji 600 rupees for my X-ray. You know what? There was a tie-up between Dr. Reddy and Gupta ji. For every X-ray that has been done by Gupta ji, 200 rupees would go to Dr. Reddy. Oh my God. Does this happen in real life? Right answer is yes, it does happen. Sir, for every X-ray done by Gupta ji, 200 rupees would go to Dr. Reddy. Provision says any such commission paid by the diagnostic center for referring patient for diagnosis is not allowed. Oh my God. Tax on non-monetary perquisite paid by the employer is not allowed. Sir, we'll study that. Sir, any kind of sponsorship fees, any kind of non-competition fees, any kind of branch inauguration fees, any kind of glow signboard, any kind of grant on ISO certificate is always allowed. Sir, if I had omitted to note down any bill in my book, it shall be allowed. If I pay any kind of a tax interest penalty, sir, remember, if you pay any kind of tax, interest, penalty, late fees for the income tax or direct tax, so any interest is not allowed, any penalty is not allowed, any tax is not allowed, any late fees is not allowed. So nothing is allowed. For direct taxes, if you are paying any taxes, it is not allowed. Sir, for advance tax, if you are paying advance tax, interests are not allowed. If you are paying advance tax, sir, it is not allowed. Sir, if you are paying late fees in advance tax, we do not have late fees in advance tax. Sir, for TDS, if you are paying TDS, sir, it is not allowed. Sir, if you are paying interest on TDS, it is not allowed. If you are paying late fees in TDS, sir, it is allowed. It is debatable topic that whether late fees in TDS should be allowed or not. Sir, normally it should not be allowed. Legally, normally it should not be allowed. But some of the questions of MAT ICI does allow it. So we must remember that late fees on TDS is allowed even though it is debatable. Sir, for other taxes, sir, for example, GST interest is allowed, tax is allowed only if credit is not available, late fees is allowed, but penalty for any law is not allowed. If you pay penalty in income tax, if you pay penalty in other taxes, nothing is allowed. Nothing is allowed. Sir, any sum pay to settle the proceedings in relation to contravention of any such law is not allowed. It's a basic provision it is. Section 40. Listen to this point carefully. Last section for the day. Last section for the day. Sir, if you were required to deduct TDS on a payment, if you were required to deduct a TDS on a payment and you did not deduct in previous year actually. Sir, if you were required the TDS, you did not deduct in previous year. or you were required to pay it before ROI, you did not pay. In both the cases. Sir, if you are making payment to a resident, 30% will be disallowed. If you are making a payment to non-resident, 100% of such expenditure will be disallowed in current previous year. Sir, for example, I have three questions from all of you. Three questions for all of you, sir. First of all is, sir, date of payment. Just answer these three questions. Just answer these three questions. I'll know that you know or not. Date of payment was 31st March 2025. Case 1. Date of deduction was 31st March 2025. Date of payment was 7th April 2025. Case 1, will it be allowed or not? Just write one point, allowed or disallowed. Just write this. Just write this. I am writing the case 2. Case 2. 31 March 2025. Deducted 31st March 2025. Paid 15th December 2025. Case 2, allowed or disallowed. Case 3. 31st March 2025. Deducted 1st April 2025. Paid 15/12/2025. Sir, case 3, allowed or disallowed? Case 4. Arjun, write yes, write allowed or disallowed. One point, allowed or disallowed. Just write this in this format so that I also understand. Monisha says one is allowed. Monisha, allowed, allowed said by Monisha. Case 4 is, so date of payment is 31st March 2025. Deduction is 1st April 2025. And sir, payment is sir 7th April 2025. Just answer it as soon as possible. If you want to go, just answer this question. Just answer these four questions. First one, allowed by Monisha. First one, according to Monisha, it shall be allowed. According to Monisha, it shall be allowed. It shall be allowed. Chandu says allowed, and Chandu is in favor. Chandu is in favor. Chandu is in favor. What? Who else says allowed? Who else says allowed? Who else? Arjun says disallowed. Sorry, Arjun says allowed. Arjun says allowed. Who? What? What other people say? What other people say? Please answer. Please answer. This will build your concept. Sir, if you are done with first, write the second one. If you are done with first, write the second one. If you are done with first, write the second one. Sir, first one, according to all of you, it should be allowed. Sir, did we deduct on time? Yes, sir. Did we pay on time? Yes, sir. Sir, it should be allowed. Everybody is correct. Everybody is correct, sir. Just tell me the second one now. Moving forward to second one, sir, will that expenditure be allowed? Will that expenditure be allowed in second case? Will that expenditure be allowed? Are Baba, tell na. Monisha says not allowed. Monisha says not allowed. Monisha says not allowed. Bhargavi, first allowed. Bhargavi, in second case, not allowed. Chandu, not allowed. Everybody says not allowed. Monisha, Bhargavi, Chandu, everybody says not allowed. Everybody says not allowed. Arjun, what's your answer? And other people who are just sitting and not responding, what's your answer? Arjun, disallowed, disallowed. So everybody of you got correct because we deducted on time, but we did not pay on time. So it shall not be it shall not be allowed in previous year. Sir, answer the third one. Answer the third one. Monisha says not allowed. Monisha says not allowed. Not allowed is said by Monisha. What other says? Monisha says not allowed. Monisha is leading near class. She is answering every answer correctly, that too with first attempt. So you got to beat Monisha. Arjun says not allowed. Bhargavi says not allowed. Chandu says disallowed. Chandu says disallowed. Sir, everybody said the same. Sir, we did not pay on time, disallowed. Did not pay on time, sir, disallowed. Previous year. Sir, fourth point. Fourth point, allowed, disallowed, allowed, disallowed, allowed, disallowed. Oh dear Lord, I want the faster answer. What is the fourth answer? Monisha says allow, allowed. Monisha says allowed. Bhargavi says allowed. Chandu says allowed. Arjun, what's your take? What's your take? What's your take? Arjun is always last. He firstly assesses the answer of everybody, and at last he throws a bouncer and he says not allowed. Everybody is saying allowed, and Arjun is saying not allowed. Why, Arjun? Why? Sir, there is a reason behind it. There is a reason behind it. Sir, TDS has to be deducted in previous year. TDS has to be paid up to the period of ROI. If both the conditions are fulfilled, then only expenditure is allowed. Otherwise, sir, if any of the condition is failed, sir, you have to disallow this expenditure. Sir, did you deduct a TDS on time? For deduction, you have to deduct in previous year itself. For payment, you have to pay it before ROI. If both the conditions are fulfilled, then only this expenditure is allowed. Sir, in this case, since you did not deduct on time, this will not be allowed. This will not be allowed. Oh my God, sir, welcome to CA final. This is the depth that we are going to study again further. I hope you got the point. I hope you got the point. Sir, many a times we either fail to deduct. Okay, sir. Many times we fail to deduct. In that case, expenditure will be disallowed to us. If we fail to deduct, expenditure will be disallowed to us. But sir, if assessee whose TDS has not been deducted, assessee whose TDS has not been deducted, either furnishes his income, declares such income as total income, pays taxes, and furnishes Form 26A from chartered accountant to me, then in that case, such expenditure shall be allowed to me. But sir, it shall be allowed in the previous year in which taxes are paid. For example, on 31st March 2025, I paid salary. I did not deduct TDS. Did not deduct TDS. So for previous year 24-25, it is for sure. It is for sure. If I did not deduct TDS in 24-25, for sure expenditure will be disallowed. For sure expenditure will be disallowed. No second thought whatsoever, sir. Expenditure will be disallowed. But sir, it will be allowed in the year in which the recipient offers salary. Sir, in previous year 24-25, 25-26, he is going to file return on 31st July. 31st July 2025, he is going to return file. So for that matter, whenever he offers such income, sir, it will be allowed to be in previous year 25-26, sir, not in previous year 24-25. In whatever previous year he pays the taxes, in that previous year, such expenditure will be allowed to be. That means if such expenditure is disallowed in current year, it will be only allowed in the year in which it is paid to the government. It is paid to the government, not in previous year 24-25, but rather 25-26. Also, since taxes are being delayed to the government, in that case, government will charge interest at the rate 1% from the due date of deduction till the date in which payee furnishes the return. From this 31st March 2025 till 31st July, government is going to charge interest. Yes, sir, we got this point. Government is going to charge interest also. Provision says For example, if we did not deduct it in previous year, or we did not pay before ROI. So if any of the conditions is not fulfilled, provision says that expenditure will be disallowed 30% or 100%. So that will be only allowed in the previous year in which it is paid. For example, I did not deduct it in this year. I did not deduct in this year. Provision says whenever you deduct is not relevant now. Whenever you deduct it is not relevant, you have to check whether it is paid or not. The date on which it is paid, the previous year in which it is paid, it will be allowed in that previous year. Did you get this point or not? Sir, if I fail to deduct this year, later on I deducted in some other year. It is not relevant. Year of deduction. Once previous year is crossed, year of deduction is not relevant. Once we cross previous year, then year of deduction is not relevant. Only thing relevant is whether taxes are paid to government or not. In whatever year the taxes are paid to the government, in that previous year, I will be allowed the remaining 30% or 100% of such disallowed expenditures. So example, understand this with an example. For example, I paid salary on 31st March 2025, for example, 10 lakh rupees. I was supposed to deduct 30 lakh TDS. I was supposed to deduct the TDS at the rate 1.5 lakh. I failed to deduct. Sir, if I deduct the TDS on 1st April 2025, it is not necessary that I will be allowed deduction in 24-25. I have to pay deduct the TDS. Sorry, if I fail to deduct, expenditure will be disallowed. Expenditure 30%, 700% will be disallowed in previous at 24-25. It will be allowed, it will be only allowed in which such TDS has been paid. For example, it is deducted on next day only. But if I pay on 1st April 2029, it will be allowed in 29-30. Did you get this point or not? Because deduction year becomes irrelevant after previous year. Only payment year is what matters. Sir, if you are required to deduct equalization levy and you did not deduct, sir, 100% of the expenditure is disallowed. If you deduct but did not pay up to ROI, 100% of the expenditure is disallowed. Sir, if you are paying any salary to non-resident, see every expenditure set apart. Every expenditure set apart. But if you are paying any salary to a non-resident, sir, it should be deducted and paid to government up to the due date of TDS payment. That is 7th of next month, or in case for March 31st. 30th April, it should be paid. In case of salary to a non-resident, it should be paid. It should be paid up to the date of TDS payment. Otherwise, that shall be 100% disallowed and it shall never be allowed even if it is paid before ROI. So for non-resident, every expenditure is kept aside. But if it pertains to payment of salary, you have to deduct a TDS. You have to pay such TDS up to the due date of TDS payment. Up to the due date of TDS payment. Tax on non-monetary perquisites borne by employer shall always be allowed. These are the expenditures. Sir, I hope you got the point. I hope you got the point. So that's all from my side today. It has been wonderful, 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 joyful class. And sir, I really enjoyed teaching this topic. I hope you also enjoyed the same. Sir, what homework that I want to give to you is I want to give you two questions to solve today. Two questions you can solve today. Sir, what are those two questions? Mm-hmm. Sir, DPQ 3 is question number 18. Question number 18 of Super 100. Gomti Limited. It is based on 33 AB. And question number 17 of Super 100. Sheetal Limited. Based on PGBP. Thank you so much, sir. This Super 100 is to be sent DPQ4. Since this is the fourth class, the four questions at least must be done by you. So at least you have to solve these two DPQs. Sir, you will be humbly welcomed in the class if you are solving these two DPQs. I'm just telling now, if once you solve these questions, you will have a different confidence altogether in writing the answers. Otherwise, you will feel some kind of what to say. Your hands will not work the way it should work in exam. Your hands will shiver. You will not remember how to solve. You will not remember what the format is. You will not remember what language to write. Everything will be solved if you practice this DPQ. So just remember, this is nothing but a kind of boon given to you that you are forced to write this DPQ. And even I am the one who will be evaluating you. You just have to write it yourself. You have to share it on my Telegram channel. I will be the one seeing your answer. I will be the one evaluating your answer. I will be the one suggesting what to be corrected. I hope you got the point. So, sir, thank you so much. Thank you so much for coming, for becoming part of this session. Tomorrow session will also be on YouTube. From 6 session, you will be watching this batch on app. So, if you have not enrolled even till now, you still have option of enrolling. If you really like the efforts, the way we are teaching, I would request you to recommend it to your friends so that many other people who want to come live, who want to understand with this level of depth in such a small time, they can also do that. Along with that, even if we have certain question answers, we will be solving that in Capitalian like we did, in IFRS like we did. We will be solving question answers from other topics also. From all the topics, I have collectively made 134 questions. So we'll be solving this also. So you need not to worry at all. Your preparation is in my hand, and my if it is in my hand, it is in safe hands. Need not to worry. Do recommend it with your friends. Do like the video. Do comment down your experience. How did you perceive this class, so that even other people also may feel experienced what this batch is all about. Thank you so much. Many thanks for watching. See you tomorrow with same energy, excitement, and enthusiasm. Till then, take care. Enjoy studying and continue studying and do solve DPQs. Bye bye.